Nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The election is not what's going to drive markets in the long run.
Investors think that the stock market, whether it's going up or down, has a real leash on the president. I don't think that that's true.
There might be some more policy uncertainty, but I don't think Trump, who probably campaigned on a better economy, wants to see the economy go into recession.
You still see investors trying to rotate within equities rather than wholesale coming out of equities.
I think the market will be okay as long as it's a growth story.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Two things to watch at the top of this hour, the risk aversion and the reason behind it. 1, 2, numbers from Walmart about to drop this hour. Look out for headlines in just a moment. Let's start with the price action, equities, and then on to bonds. Equities right now, negative across the board. We're down by 0.4% on the S&P. On the Nasdaq 100, we're down by 1/4. In the bond market, a little bit of a bid. You see it across the curve, 2s out to 30s. Yields are down by 3 basis points on 2s. We're down 4 basis points on 10s. On 30s, we're down 3 to 457. The headline across the Bloomberg terminal about 3 hours ago, around 4:20 Eastern time, speaking to a strike by Ukraine inside of Russia using U.S. weapons, Anne-Marie, an escalation in the last 24 hours.
An escalation. The United States has given Ukraine the green light to do this. This was on the border of Ukraine and Russia. We are hearing from the Russian Defense Ministry coming out and citing that there was these attackums. They say 5 of those missiles were shot down. But this is an escalation at a time, Jonathan, when you have an outgoing U.S. president that gave this green light and an incoming U.S. president that campaigned on the fact that he wants to end this war. How much of this is leverage and intimidation as well from the Russian side with this new decree out on nuclear posturing? How much of this is potentially to get them to a better negotiating stance at the table?
That's the first story. Here's the second. Walmart numbers just dropping. And Lisa, right now that looks like a beat on the top and bottom line.
Yeah, raising their full-year adjusted earnings per share, $2.42 to $2.47. They previously saw a range of $2.35 to $2.43. You go through comp sales in the United States, removing gas, up 5.5% versus the estimate of 3.8%. There were some signs that maybe this isn't some sort of gangbusters excitement around holiday shopping. Full-year net sales up 4.8% to 5.1%. So yes, climbing, maybe not necessarily going gangbusters. But if you want to read on the U.S. consumer, the early look from Walmart is it looks pretty good. And that's what's being read through to the stock market.
Where is the growth coming from? This from the team here at Bloomberg. A lot of that growth was driven by upper-income households making $100,000 a year or more. We do this every time Walmart numbers come out. If Walmart's doing well, how's the country doing?
You know, honestly, I think that Walmart's getting a fuzzier read on a lot of things. First of all, it's important to note that it's not just higher income individuals going down the ladder and trying to get a deal. Walmart is also catering more to higher income individuals by selling items that are higher end items. So that's number one. Number two, Walmart is also gaining share from the likes of Amazon with their online platforms. I want to see the breakdown with the online apparatus. They also are creating their own shopping network. So what is Walmart? Is it the same company that it was 5 years ago? And I think that's important to understand whether this truly is a read-through to other retailers.
It's changed a great deal. Target reporting a little bit later in the week. Walmart in the pre-market up by 3.7%. Coming up this hour, we'll catch up with Drew Pettit of Citi as stocks move lower on geopolitical tensions. We'll speak to Neil Dutta of Renmac as the Trump Treasury saga drags on, and Joe Feldman of Telsey Advisory Group as big box retailers report results throughout this morning and over the next few days. We begin this hour after a Tesla-fueled tech turnaround helped snap a two-day losing streak. Drew Pettit of Citi writing the following. Market action last week reflects how its participants feel. Exhausted. Earnings have been solid. We got the beat and hold we expected. The Mag 7 continued to provide cover for earnings deterioration in the other 493. Drew joins us now for more. Drew, good morning. It's good to see you.
Well, thanks for having me back in.
Some more numbers on the board. 6,500 over at Goldman, 6,500 over at Morgan Stanley. Year-end price targets on the S&P for 2025. What are earnings doing? What's the earnings outlook look like?
I think pretty good. Look, can't comment on the specifics this morning, but look, it's a good example of we're getting beats, and even though we are getting cuts for full year, you're starting to see people kind of move past some of the malaise, starting to think about maybe next year. There are some really good earnings revision stories that are hidden underneath the index level. Honestly, a lot of it has to do with some types of secular trends like e-commerce, for example, in operating efficiency. But overall, we really do like the earnings picture.
What's driving that earnings picture? Is it better top-line growth? Are they defending margins? What are they doing?
So defending margins, but how is what's really interesting. So the S&P 500 has a lot more operating leverage than we kind of realize. It's not your average business. There's so many companies that are growing the top line 1-2%. You're seeing earnings expand 4-5-6%. That's not necessarily as buyback driven as it used to be. But what's happening is you're seeing sales increase at a faster pace than employee count. And that gets really, really obvious in some of the winners within a lot of sectors and some of the sector leaders as well.
This is the productivity story, essentially, that people are becoming more efficient and that you're using technology to make people more valuable per unit that they end up selling. But there's a real question of whether we're kind of hitting a limit here. And that's something that you kind of feel why people aren't going to 7,000 next year or maybe 7,500. But there's this feeling that maybe we're not going to get the upside revisions that can really beat that much more. Are you sympathetic with that?
So it's a little bit tough to extrapolate this on the revision side because there's always this bias for downward revisions in the United States. The analysts here are optimistic. So the trend is always start really high, let's work our way down. The difference is with some of the really good earnings momentum story, we're starting high and we're not really working estimates down as far as we normally do. So I think on the operational efficiency side, we talk a lot about tech and leveraging people, but there's a lot of like low-hanging fruit that we think still can get picked. So right now we're talking about AI and all these big productivity stories, but designing a product that fits in a smaller box that requires less shelf space, that you fit more in a container and ship, these are all pennies, and really good operators are finding these pennies. So the Mag 7, information tech, comm services get that leverage, but even looking at something like financials, they've had a lot of operating leverage in the past year as well.
So are those the sectors that you're most excited about? Or are there sectors that you don't think are benefiting from these same efficiencies in the same kind of way?
Yeah, those are the sectors we like the best.
Okay.
And that's where, again, like our whole thesis this year around stock picking and sector selection has been operating leverage. So you came off a year where you started to see some tailwinds after working through 2022 and issues, and this year was about operating leverage and follow through. And I think the winners, even within sectors, have shown that.
5-minute conversation on the equity market without a single mention of policy from the Donald Trump administration. Any underlying assumptions about policy, and how important is it to you? We're all obsessing over the moment over the future of the Treasury Department. Does that all matter to you?
It does to some extent on what it's going to signal, but I'm going to push back on something I heard earlier on the show. I don't think CEOs and C-suites necessarily just sit there and go, we're just going to have to wear this is going to suck, we can't do business. They are investing in secular trends. I know I see you laughing and I'm teasing.
No, I wasn't saying that I'm saying that there is a paralysis in terms of how much to expand in certain places because of a lack of certainty of national security and a certain question around how things will be dealt with on an antitrust level. That said, it's still, people are still operating their business. Do you disagree with that?
Partially. If you're doing a big investment in something, here's the weave we were talking about earlier.
Yeah, carry on.
But it is funny, if you're doing something that's big and transformational, yes, you're probably going to pause before you get a little bit more policy clarity. But what I think is really interesting, there are secular trends that politics, they might change that slope very marginally, but they're probably not upending it. So that's the type of investment you can keep doing, and that comes back to tie this all together. If I have operational efficiencies I can gain, I'm going to push on that lever, and I think good businesses are still doing it.
Drew, we're 2 weeks out from the U.S. election, and you already said market participants are exhausted. That was your earlier note this week. There's exhaustion. We saw RFK be announced for the Department of HSS, and guess what? Pharmaceutical companies sold off. How much is what happens in Washington or right now Mar-a-Lago going to be impacting specific industries?
That's where we get back to the weave here. And the other side of this, pharmaceuticals, they're going to have their issues. They're going to have to think about how they can actually get growth and change the sentiment. When we talk about exhaustion, we're talking about really high sentiment. You're pricing in all of this good news, tax breaks, deregulation. You're starting to run out of good things to find. And now the news cycle is getting a little trickier because we moved from U.S. election to, is the Fed going to cut? Now we're sitting here with geopolitical tensions again. I said we were exhausted last week. I don't think it's going to get much better this week by the looks of things.
Well, at what point does the market start, and I guess they're doing it today when it comes to geopolitics, but some of the other provisions that a Trump administration wants to go after, tariffs potentially day one, when does the market actually start to price that in?
I think when we finally get a little bit of policy clarity. So tariffs, a little bit messy because it's tough for equity markets to price that in before we figure out what FX markets are going to do. If you had a 10% tariff, but then you whack the currency down 10%, does that really have an impact on gross margins? And then on the other side, in Trump v.1, 90% of exemptions on tariffs were granted to U.S. companies. So back to, we need a little bit of policy clarity to finally price that in. That's a very complex subject that a lot of clients are asking questions about right now.
So when you put the weave together, it sounds like you're incredibly bullish and that you're not necessarily seeing the uncertainty that a lot of people are seeing. So I know Citi hasn't come out necessarily with their next year forecast, but can you give us a sense maybe of what the number might rhyme with and kind of whether you're equal weight or whether you're market weight?
So fundamentally bullish. I'll be very clear there. No ifs, ands, or buts. I think a lot of secular trends are very interesting. A little concerned on how much growth we're pricing in. So a little bit cautious on valuation. How we handle that is we like the growth side of the market, especially communication services, and you see the price action today. That's your macro hedge. That's doing better than Russell 2000, but we like pairing that with cyclicals as your valuation defense. So we like that pair. Let's just skip over defensives. Don't think they actually provide defense.
Smells like 6,400. Maybe. All right, maybe. Maybe. Drew Pettit of Citi. Possibly. That's just me saying that. That's not what they're saying. Wait for the big unveil. Coming to a news program near you. Let's get you an update on stories elsewhere this morning. Is it 64? Maybe. Let's get you Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Russian media confirming reports that Ukraine conducted its first strike using U.S. long-range weaponry within Russian territory. Russia says that their defenses responded to the missiles dubbed ATACMs. The move comes just as Russian President Vladimir Putin pushed ahead with a pledge to update Russia's nuclear doctrine, allowing Russia to respond with nuclear weapons to conventional attacks. The Kremlin said it will view aggression against itself or its allies by a non-nuclear state backed by nuclear power as a joint attack. A check on Walmart shares, those higher pre-market by 4%. It posted a beat on its top and bottom lines. Walmart boosted its outlook for the year, citing strong demand from U.S. customers across the income spectrum seeking value. Households making $100,000 a year or more drove a significant portion of the company's growth, with customers buying more at each visit. Walmart also saw strong growth in e-commerce. Online sales now total about 8% of its total business. According to people familiar, Apple has increased its offer to invest in Indonesia by almost tenfold. The hope, persuade the government to lift its sales ban on the iPhone 16. The U.S. tech giant will invest almost $100 million in the country over 2 years. Indonesia's Ministry of Industry hasn't made a final decision on Apple's newest proposal. That's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes. Just want to triple confirm that outlook from Citi is not out yet. No price target just now on the S&P 500.
Yeah, but blink twice if it's 6,400.
Up next on the program, Trump's latest Treasury contender.
There seems to be concern among a lot of people in the Trump camp that all of the Treasury people who are being considered who have Wall Street ties are just not MAGA enough and don't seem to, in particular, have enough support for Trump's tariff policies.
The view from Neil Datta of Renmac up next.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equity futures recovering. Check out shares of Walmart in the pre-market. Some of the why for you. Walmart up by close to 4%. Lisa, it's a beat and a raise.
Yeah, although when you start digging into the internals here, hard to see whether this really is some sort of macro story versus a Walmart story. Yes, they are seeing sales sizes get bigger. They are seeing more people who earn more than $100,000 spending more money. These are the items that are selling well. AirPods, televisions, and tires. Put together a macro narrative from that one. Go for it.
AirPods, if it was its own company, would be absolutely humongous.
Yes.
Seriously.
Especially for all the
Mint
people
in cash.
who lose them and they kind of go bad after a year, and all of a sudden you need to upgrade to something.
I have 3
noise
pairs.
canceling.
I've had 5 pairs too.
I mean, it's ridiculous.
Sounds like a complaint for another day, given the threat of nuclear war that's taking place right now.
way to put me in my
Seriously.
place, John.
Yeah.
Thanks.
We've got space to joke still. Let's turn to the bond market. 2-year, 10-year, 30-year. Yields are lower today. You see this on a 10-year piece, 436.87. There is some risk aversion out there, a real escalation over in Ukraine, as Ukraine strikes inside Russia using U.S. weapons. More on that story later in the program. And the surveillance this morning, Trump's latest Treasury contender.
There seems to be concern among a lot of people in the Trump camp that all of the Treasury people who are being considered who have Wall Street ties are just not MAGA enough and don't seem to, in particular, have enough support for Trump's tariff policies, which is, of course, reasonable if your concern is overall U.S. economic growth. And that, I think, is what's delaying here. So it's hard to blame it on anybody except for Trump himself. This just seems to be how the guy makes decisions.
So here's the latest this morning. President-elect Donald Trump's transition team reportedly considering naming former Federal Reserve Governor Kevin Walsh as Treasury Secretary and hedge fund manager Scott Bessent as Director of the White House's National Economic Council. Neil Dutta of Renmac writing, I have reservations about this. Walsh's endgame has always been Fed Chair, not Treasury Secretary. More importantly, because he wants the job as Fed Chair, I think that will make him more prone to reinforce Trump's worst impulses on tariffs. Neil joins us now for more. Neil, how much weight are you putting on this decision? How important is this one decision to you and the team to really get a deeper understanding of where the emphasis of this Trump administration will be?
Well, I do think it's more important than last time. And if you recall, the last time Trump was president, the sort of framing, as I recall it, was the Republicans in Congress will sign him bills, and then he will send him bills, and then he will sign them into law. But this time, there's a lot more momentum behind Trump himself, right? I mean, he's the one that is got elected, had coattails and so forth, and the policy, I think, is coming more from the White House. And as a result, I think this being one of his first major economic decisions, I think it'll set the tone for kind of the economic management of the country and the policy for the next several years. So I do think that the stakes are somewhat higher now than before.
One issue you take with is that you think that Walsh would not be able to reinforce Trump's worst impulses on tariffs. Who do you think could do that? There's about 4 names that are floating now, according to sources familiar to me and my colleagues. One of them we just discussed, Kevin Walsh, but of course there's still Scott Bessent for Treasury. There's Mark Rowan, and then dark horse candidate maybe Senator Hagerty.
Well, I mean, I do think that it's going to be difficult for anyone to get in front of the Trump train with respect to tariffs. I think if I were talking to President Trump, I would say, would you want someone who's hawkish when the economy is weak and when the economy is strong? Is that what you really want as your Treasury Secretary? I think someone like Lutnick, frankly, would probably be, someone that would reinforce the worst impulses on tariffs. As I say that because, one of these candidates actually rallied with President Trump at MSG, and that was Lutnick, I believe. So, look, I mean, I think there are problems with all of these candidates. We've said publicly at Renmac that if we had to pick, we think Scott Bessent would probably be the best choice of the names reported. But the Treasury job is a job that requires a lot of knowledge around macro markets, finance, and you need to be able to navigate personalities. And I do think that Mr. Bessent's someone that's navigated personalities as wide-ranging from George Soros to Donald Trump.
So you think this is also a
qualification in my book?
So you think it's also a personality issue? If it was to be Scott Bessent or he was to go into the NEC, what do you think his view is on tariffs? Because we've gotten almost 2 different versions, whether or not he's for blanket tariffs or he thinks they need to be used as a negotiating tool.
I think he'd be a reliable advocate for the president's policies to use tariffs as a way to re-level the trading relationships between us and our major trading partners. He said as much in a recent op-ed. So, look, you're not going to find many people out there that are willing to put the sort of tariffs in place that President Trump ran on during the election. That's just a reality. And if you find some of those people, they may not even know sort of the ins and outs of some of the financial markets that they'd be overseeing, right? I mean, so it's a matter of their expertise in some of these issues. So that's a stretch. But I do think that he would be someone that would carry out the spirit of the president's plans.
Neil, there is this question about taking Donald Trump seriously but not literally, and that seems to be what markets have been doing, trying to basically take the pro-growth impulses and saying that a lot of the other stuff, including tariffs, were negotiating tactics. From your perspective, from Renmac's perspective, if Donald Trump does choose somebody who is viewed as more hawkish when it comes to tariffs, would that change your view materially for the U.S. economy and U.S. markets?
No, I mean, I think the hawkish tariff stuff is already in the price. I mean, remember, when we talk about tariffs, it's also important to remember that we're talking about relative price changes, right? I mean, if you look at what happened last time, prices rose for the things upon which the tariffs were put on, and prices generally fell for other things. Okay, and we're in a situation now where Trump inherits an economy where nominal growth is generally slowing down. So if tariffs are put on imported goods, I'm not sure which goods those would be, the prices for those goods would rise, but the prices for other goods would be coming down because nominal growth wouldn't be accelerating, and at least not immediately.
Well, okay, but given that, Neil, then do you really think that the market is actually responding to this Treasury Secretary pick? Because according to what you just said, if it's not going to have that material of an impact on your economic outlook for the United States or the market outlook, then why are people making such a big deal about it?
Well, I mean, I think it's about, well, remember, Lisa, the market did rise very sharply following the election of Trump, right? And I think part of that is about confidence. It's a confidence game. And Trump himself has said that, or at least according to press reporting, that the way the markets react to the announcement of his Treasury Secretary is an important signal. They have said that. I think that there's potential for confidence to not be reinforced with this potential pick.
Neil Dutta, we appreciate your time, sir, and your thoughts. Neil Dutta there of Renmac on the race to be Treasury Secretary. Just to echo some of Neil's thoughts there, because I think they're really important. This is a really different moment for this country. We're going to see some massive policy shifts with global consequences, which could feed back negatively into US markets. And you need someone in the Treasury seat, I think, who's a market specialist, I think now more than ever, just to echo where Neil was going with this. So if we just take a big step back once again and acknowledge once more, it's only 2 weeks since the election. If you go through the short list, these are really, really, really high caliber individuals, from Kevin Warsh, Scott Bessent, Mark Rowan, Senator Haggerty, all of the above. But I think this is probably a moment where you want a market specialist, which speaks to Bessent, which speaks to Rowan, just that little bit more.
And not just a market specialist in terms of the United States. We're talking about a global market specialist. If you're going to be the individual that is going to oversee not just the sanctions and the $28 trillion of debt, but also how these tariffs are going to be used and what happens if there's a reciprocity on the other side and some of those other countries start to put up their walls.
Just remember, managing the maturity profile of treasuries over the last year has been a big, big deal in fixed income markets.
Oh, yeah. There's been an accusation that the focus on the short end in terms of issuance has been to avoid disrupting the long end. The importance here is nuance and the sensitivity to it.
Not much of that at the moment, Bramo. Not much of that. From New York, the latest on retail, up next.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment. Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Check out equities right now. We are down by 0.25% and off session lows on the S&P 500. On the Nasdaq 100, we're down about 0.1%. The Russell really recovering. We're down only 0.5%. We were down by more than 1% earlier on in the session. With your morning movers, let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. Let's just pick up on that, because what you have had this morning is a refresher crash course in knee-jerk headline reaction trading. You're right in terms of that Russell, but also take a look at this. Lockheed Martin still up 0.7%. It ratcheted higher this morning. Defense stocks all went bid as well. Again, on these headlines, Ukraine hitting deeper into Russia and Putin signing off on a new nuclear response. But here's the thing, according to BCA, with Marco Papich sitting down with us this morning, be wary of these knee-jerk trades in the first instance. They can injure your bigger macro trade. Roll it over, have a look at the macro personification of the United States of America. You're shopping at Walmart. Even if you're making more than $100,000 a year, you are coming in here in size. You're buying, I like what Lisa just said, airports, televisions, and tires. I don't quite know where the tires fit in, but to be fair, this is about raising the guidance for the year. Families are seeking value, leaning into the holiday period, and online business is up 27%, and it's now just under 20% of their overall business. So, all bid there. I leave you with a pretty stunning performance, microcomputer. How do you stay on NASDAQ? You say to the board, we're going to give you our filings. We're going to be clear and deliver clarity. They've hired a new auditor, BDO, and so you have this massive ramp higher. This stock, it's the darling of the data centers. 39% return in 21, 87% in 2022, 246% return in 2023. But it is all about transparency. Can they do that with a new auditor in BDO? Good morning. I'm off to buy a few tires.
Manus Cranny, you enjoy yourself. Send us some photos. Thank you, sir. You can see Manus in a Walmart buying tires, can't you?
I'm actually looking at the tires, and they're all on sale, and that's probably why. And I will just say that, especially ahead of winter time and all-weather tires, you don't have to change them every 6 months. I imagine a lot of people are trying to upgrade.
There's a very original Walmart update for you this morning. The stock is high. We'll come back to that story a little bit later, maybe absent the tires. Under surveillance this morning, Trump's Treasury pick still in flux. Sources telling us here at Bloomberg the president-elect is considering former Fed Governor Kevin Warsh for the Treasury Secretary role and hedge fund manager Scott Bessent as NEC director. Worth pointing out that things are still pretty fluid.
They are still pretty fluid, but they do see potentially this could be a pair-up. Again, we need to see how Kevin Warsh does in terms of sitting down with President-elect Trump when he goes to Mar-a-Lago for this job. We know that he's interviewed with Trump, but that was for a Fed chair job. And to Neil Dutta's point, that does seem to be the job maybe he wants. We should note, Howard Lutnick is out of the race. So the producer that wanted to be a star, this is not where his star is going to land. Maybe they will find another home for him, but it's not going to be a Treasury. So that leaves you with 3 top and then 1 dark horse. Scott Bessent, Kevin Warsh, and of course Mark Rowan of Apollo will also be going down for an interview. Senator Hagerty potentially could be an individual that's interesting because
that name just won't go away, will it?
It won't go away because, one, he is viewed by the business community as a very good pick. He's viewed by diplomats as a very steady hand. Of course, he was the ambassador to Japan under Trump's first administration, and he's going to get the applause of senators on both sides of the aisle.
We were due to catch up with the senator from Tennessee this morning. We're working to reschedule that conversation later in the week. Maybe we've got news. Who knows? Let's turn to this story. Russian state media confirming reports Ukraine conducted its first strike using U.S. long-range weapons within Russian territory. Russia saying their defenses responded to the missiles, shooting down 5 and damaging another. And that really is the two-part story to the session so far, Bramo. On the one side of 420, a really negative headline, sign of escalation, equities down, then reports that the damage was limited. On the other side, just a few hours later, equities started to rise just a bit.
There's a feeling that maybe this is the tit for tat ahead of some broader negotiation, but you start worrying about nuclear war and all of a sudden people get worried and they pile into treasuries, which is what people were looking at. What the market is saying right now is a couple things. Number one, treasury is still a haven bid when all is said and done. So is gold. Oil prices go up. But people are not that worried that this is going to escalate because this doesn't feel, as much as the rhetoric is existential and as much as maybe we can't joke about certain things because there is this existential risk, there isn't necessarily a real fear of this turning into.
Well, there's other tea leaves to read, and that's to your point, this idea that maybe this is all negotiating to get to the negotiating table, to make sure that you have the best hand you can play, because President-elect Trump says he wants to end this war. What else did we see recently? Olaf Scholz, the Chancellor of Germany, I would argue probably from a position of weakness, given the fact that he is dealing with the political crisis in Germany, but called Zelensky. And part of that was to say, maybe you should be open to a negotiation. But the fact of the matter is, there is escalation today because we have ATACMS, given the green light by the United States, being used in Russian territory on the border, and then the rhetoric heated in Russia in the sense of this edit of a decree when it comes to nuclear.
President-elect Donald Trump wants to end this war. Does this help him or hurt him?
I think this helps him in the sense that you do see rhetoric rising because you can potentially see why. You're going to see both sides want to do this because they want the best hand they can play if they are forced to a negotiating table.
Those two headlines this morning, whipsawing equity markets one way and the other. This has helped equity markets get off the lows as well. Walmart delivering better than expected third quarter results. The company boosting its outlook for the year on strong demand from U.S. consumers searching for value. We'll get results from Target tomorrow morning. That stock at the moment for Walmart, Lisa, up by a little more than 3%.
Yeah, and I'm looking at it and I keep wondering, what is Walmart? Is Walmart still a retail company, or is this actually now an advertising company, a marketplace, also, some sort of media company? Because they're expanding in all these different ways and they're really taking on Amazon. I do wonder how much their narrative shift is really affecting the way people treat this as maybe not as much a macro story as much as what we were just hearing about, which is the efficiencies of scale, the efficiencies of technology, and the efficiencies of being the biggest behemoth in the pool.
Let's have that conversation right now with Joe Feldman of Telsey Advisory Group. Joe, welcome to the show. Following those numbers from Walmart, I'm going to steal Lisa's question to kick off the conversation. What is Walmart these days, and how much has that company changed?
Yeah, so Walmart is a terrific retailer that's grown its ecosystem, and it's much more than just a retailer these days. I think, they have become more similar to what an Amazon is in terms of offering, a marketplace, offering advertising, and effectively selling across the board online, in stores. And they've grown their whole ecosystem as a result. They've been able to capture a more affluent consumer. They're still satisfying that lower income consumer that needs the low prices on a day-to-day basis. And so they're really serving the American customer very broadly right now. And this quarter was very strong, and I think it just shows those results.
Yeah, Walmart's online sales now represent about 18% of the company's business. They also have things like coupons for loyalty members to places like Burger King. I'm just wondering, Joe, if there is still the read-through from a Walmart results to the rest of retailers. Do we get a real sense of the consumer and the health they're in?
Yeah, no, I do think there's still a good read-through. I mean, Walmart is still the largest retailer in the world, and, they are still, especially in America, the largest, and they're capturing customers day to day. I mean, around 2/3 of their business is groceries. And so they're seeing that customer come in once a week. And their grocery business was up mid-single digits in the Walmart US operation. So the customer is still coming in on a regular basis. They're seeking value. Their private brands have done well. As I said, they've captured a more affluent consumer. So it just seems like I do think it's still a good read on the broader consumer. But what's really interesting here is they do so much more now than just sell stuff out of the store. And I think that's what's gotten investors very excited. And you can see the strength and the market share gains that they've had with the reports that they just did this morning.
Is their gain taking away from Amazon, or is it basically taking away from Target, from all the other retailers that are a bit smaller and less advantaged than they are?
Yeah, I think that the big guys kind of go to battle with one another, but the share gains are coming from all those smaller regional local players. I think that that's where you still see a lot of it, because Amazon's operating quite well. I mean, they have very good earnings recently, and they're expected to have another good fourth quarter. I think Target's been operating quite well. We'll see tomorrow for sure, but I would expect, some similar directional trends that we got out of Walmart today. But it's really, as you go down, the dollar stores have been under a lot of pressure this year. A lot of people believe that the Walmart's taking share from some of the dollar stores. I think that's somewhat true. Again, they are capturing a more affluent consumer, so that's coming from somewhere, maybe the traditional grocer out there. So the prices are so good at Walmart. They're so sharp. And what's amazing is they're driving their business with increased traffic, increased unit sales. Those are the good things you want to see. It's not just ticket. Ticket's part of it, but it's really because they're getting more people in the door more frequently.
Joe, I want to talk about strategy. Is the new strategy to start Christmas shopping in October next year? Is that what we're going to be talking about?
Yeah, I think we may be already happened this year, quite honestly. I mean, with Amazon Prime Day back in October, and then Walmart did an event right around it, Target did an event, Best Buy, everybody else in retail tried to capture that week. And, we've been seeing Black Friday ads for quite a while now. And, it started to kick in even a little bit more just yesterday. We noticed a lot more emails and pushing that. So that holiday season has definitely gotten stretched out. Now, this year's kind of unique because there are 5 fewer days between Thanksgiving and Christmas. So that does compress the season a little bit. And I think that a lot of the retailers tried to take advantage by elongating it on the front end. But it just seems to us that you're going to see this continue for some time now, where mid to late October is when things start, really, for the holiday season.
Joe, we're all living it. We're hearing the music. We started hearing the music about a month or so ago. Joe, I wanted to talk about a theme that we've been discussing on this program for quite a while now. It's how battle-hardened, how battle-tested these companies have been, the retailers, over the last, let's say, 8 years. They had the pandemic in the Trump first term. President-elect Donald Trump will get a second term. They could face the same again. The tariffs, the pandemic as well. When they manage inventory, Joe, how have things changed over the last several years for these retailers, given the tests that they've had, the unique tests over the last decade?
Yeah, one of the biggest things that's changed is that the supply chain finally normalized in the past 2 years, let's say. And as a result, the retailers have been able to get back to more of that just-in-time ordering. And we've seen the inventories be run very lean, really, for the past year and a half for many of the retailers. You saw that again today, even with Walmart, where they don't need to necessarily order early. Now, when events happen, like, the East Coast port strikes that happen, and by the way, we haven't resolved that. The contract has not been signed, and next round is January. The retailers did bring in inventory a little bit ahead of that. I know there's concern if and when the new tariffs get put in place by the new President-elect Trump. I think, there is some concern that we might see some inventories get accelerated prior to those tariffs. That makes sense. The retailers have definitely gotten smarter about how they're ordering, where they're ordering from. They've shifted their distribution or their supply chains beyond China. They're much stronger in other parts of Southeast Asia at this point and other parts of the world. So there's a little less reliance than the first go around with the tariffs back in 2018, 2019, but it's still going to be a big pressure, and it's going to likely pass on to the consumer. And we see it as somewhat of a tax on the consumer, quite honestly, because it's likely to raise prices. All the retailers are telling us they're going to have to raise prices at the end of the day. Maybe not for the full amount of the tariff, but definitely for a good portion of that. And we see that as an inflationary impact as well.
Joe, just to build on that, there is this feeling, and every time we see a tariff announcement, retailers sell off the most. And they're viewed as sort of ground zero when it comes to potential companies that are most exposed to tariffs. Are you saying that maybe that's already baked in to some degree, and that people have basically prepared for that, and these retailers have already plans in place to offset that?
I think the retailers, the better ones at least, have definitely been planning for it. It was interesting, the day after the election, the way the market traded, and I know there was the Trump trade and everything went up. I think the market was up 2.5% that day. The retailers that have more exposure to China were down that day in a pretty big way. And so you saw that initial reaction. So I think the market is already starting to think that way. Who has more exposure? Where do they have to lighten up? But we cover quite a few companies that, there's an example I have where, several years ago, they had 50% of their product coming out of China. Today it's 20. Actually, it's probably getting close to 20. It was 25% last year. It's probably 20-ish this year. So you've seen the retailers move and reposition through the past couple of years. And I think we'll see more of that accelerate over the next 6 months.
Hey, Joe, it's good to hear from you, sir. Good stuff. Joe Feldman there of Telsey Advisory Group. That last point on some of the retailers, we talked about it on this program the day after the election. The market was up 2.5%. Dollar General down 5%. Got absolutely punished. And I think what we touched on there is so important going into 2025. Where you sourced your goods from, how you manage your inventory, it's going to be massive for these retailers through the next several months.
And you can tell that analysts are really poring over all of the inventory lists to understand exactly where things are being sourced, to get a handle of that beforehand. But it really does highlight, and I think your question is a great one, how much people have already prepared for this. They've gotten already a preview of this, so maybe it won't have the same sort of disruptive character that it did, say, 8 years ago.
Walmart in the pre-market is up this morning by a few percentage points. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Reuters reporting that Lebanon and Hezbollah have reached an agreement on a ceasefire with Israel. A representative from Lebanon's parliament, who Hezbollah allowed to negotiate for the group, said that the deal would call for no Hezbollah forces between the border with Israel and the Litani River in southern Lebanon. A U.S. official cautioned that negotiations were ongoing, with U.S. envoy Amos Hochstein arriving in Lebanon earlier this morning to continue discussions. The Biden administration is seeking $98.6 billion in emergency disaster relief aid from Congress. The funds will be used to address the devastation from back-to-back hurricanes Milton and Helene that slammed the southeast. The administration warned that agencies on the ground helping are running low on funds. In October, Biden said the damage from Milton alone could cost around $50 billion. The DOJ is seeking to force a sale of Google's Chrome browser. Sources tell Bloomberg that the department is asking a judge to impose AI and data licensing requirements on the company. It would be a historic crackdown for the tech company. In August, it was ruled that Google illegally monopolized the search market. Google says that the proposals would harm consumers and developers. That's your Bloomberg brief. John.
Danny, thank you. More from Danny again in about 30 minutes. Up next on the program, looking for safe havens.
Often investors overstate the tactical importance of geopolitics. Oftentimes the way to actually trade politics of geopolitics is to fade the risks.
Bonds getting bought this morning. That conversation up next.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bonds bid this morning, yields are lower across the board on a 2-year out to 30s. The yen is stronger, gold is rallying. Under surveillance this morning, looking for safe havens.
I don't think that Putin has a reason to overreact. That would be self-defeating. One of the things about geopolitics is often investors overstate the tactical importance of geopolitics. I actually think geopolitics and politics is far more important for your strategic asset allocation than it is for tactical. Oftentimes, the way to actually trade politics and geopolitics is to fade the risks.
We're fading some of that risk over the last few hours. So here's the latest. Global bonds climbing on worries over a new escalation between Russia and Ukraine. Markets rattled as Ukraine carries out its first strike at Russia using US missiles. Joining us around the table is Ed Al-Husseini of Columbia Threadneedle. Ed, good morning to you.
Good morning.
Lisa said it straight away this morning walking into the studio. This was an important test. Something bad happened and we bought treasuries. What does that tell you about treasuries as a haven?
Absolutely. I think the starting level of yield has made them that much more attractive in the course of the past couple of years. And I think the outstanding question is, it's 1 day's worth of price action. If we have a more significant drawdown in equities, can we hold on to those gains on the treasury side?
Well, there's sort of this larger question of what risk do they respond to? Geopolitics, you buy bonds. Inflation risk, absolutely not. Some sort of growth risk, yes, you buy them. Is this basically people looking for some sort of catalyst to just give them an excuse to take advantage of where yields are? Is that kind of how you're viewing this?
Maybe. I mean, I would say today the positioning going into this event probably plays a key catalyst. The rates have been selling off for a number of months now. Positioning is really on the light.
That people are thinking maybe we're looking at a neutral rate closer to 4 to 4.5%. We're looking at a Fed that's going to cut into next month, but then after that maybe pause for a prolonged period of time, maybe not even cut next month. How much do you lean into that versus push back and say, if you like treasuries at 4%, well, hey, you can get them now at 4.5%, so why not go for it?
I think it's a little bit of the latter. I think the conversation around the neutral rate probably changes too frequently for most investors. In my mind, the neutral rate is secularly determined. It's determined by productivity and trends that really don't move around that much. And the fact that Treasury yields, particularly on an inflation-adjusted basis, now are yielding 2+% at a time when credit and equities are quite rich, that's a really good setup to add and diversify into duration risk.
We're running a deficit of 7% at the moment, and things are pretty good at the headline level. In aggregate, unemployment is still around 4%. Does that undermine the risk mitigation characteristics of treasuries?
I think the key question is, will that fiscal situation devolve into higher inflation? That's the toxic mix in which treasuries underperform. In 2022 was a fantastic example of this. We had some of these risks on the table in 2018 as well. I think the Fed has done a lot of work to take some of that risk off the table by being very aggressive, learning from their experience in 22, and front-loading some of the response to inflation. I think the odds of that happening next year are lower.
the supply side of the economy was constrained coming out of the pandemic. And then we basically injected steroids into the demand side, which produced some of this inflation. How much have things changed on the supply side now that would make it more difficult to generate inflation through fiscal spending, through deficit spending?
Yeah, absolutely. I think, look, ultimately, inflation is going to be a mix between fiscal and monetary policy. I think the supply side issues generally are temporary. Tariffs are a great example. They could be a supply side shock, but they will pass through. We need a fiscal response in the form of fiscal stimulus next year to really open the door to inflation. And we need the Fed to basically take a step back and be behind the curve. The odds of that combination, I think, are quite low.
If there's too much fiscal spending, do you think the bond market would push back?
That's the job of the bond market. We're going to reprice higher, and the cost of issuing that debt on the margin is going to go up. I think that's quite likely. Again, that's been the learning of the last decade, really.
We've been playing Bachelor, the Treasury Secretary version, and there's a real question here about the type of issuance that the Treasury does to fill that gap, how the Treasury has handled that recently, how it will going forward. If they increase their longer duration bond sales, do you expect the bond market reaction to be swift and notable?
I think it really all depends on the underlying economy, right? If the underlying economy is weakening and you put that duration supply into the system, no problem, we'll absorb it. If the underlying economy is still strong, risk assets are doing well, and you introduce that duration risk like we had at the end of last year, 2023, that's a really painful combination.
Does the Treasury Secretary pick matter to you? Does it change your view on where the emphasis of policy will be in the next 12 months? How influential is it?
Very limited and really on the margin. I think he's going to, or she is going to, influence the supply story.
I don't think there are any women that are nominated yet, so you could say he.
Well, we don't know.
Not in the running. Do you consider?
I can say that officially. I am not going to be getting a rose. Carry on.
I think the person's going to influence the supply story for sure. The person's going to have a voice in negotiating the tax policy changes, and of course a voice in the tariff policy. But on many of those issues, I think the course has been set by the president, and the Treasury Secretary is really not going to make that much of a difference.
It's something we said earlier on in the program. A lot of this policy is going to come from the top down, big time.
Yep, that's going to come from President-elect Trump, and those individuals he put in those places are going to just be there to really shepherd through the policies that he ran on, and he feels like he has a mandate now to implement.
Things have changed. Neil Data talked about this earlier on this morning. In the first term of Donald Trump, now President-elect, looking at a second term, we were looking at the Senate as a body that was going to send a bill to the president just to be signed. And now we're looking for the president to send a bunch of ideas down to the Senate for them to push through. And that's a big change.
Yeah, still people are struggling to understand, seriously but not literally, and to understand exactly which of the policies and how directly they'll be implemented. There have been a lot of stories around some of the picks that he's already had and how they wouldn't necessarily get confirmed. And then you have him basically coming out through different channels saying, yes, they are, because I'm going to make sure of it. I mean, there's just still a lot of uncertainty around what the agenda actually will be in implementation by President-elect Donald Trump.
If the picks so far are your North Star, it's both serious and literal, based on what we've seen so far. Ed Husseini, thank you, sir, of Columbia Threadneedle. In the next hour of Bloomberg Surveillance, Emily Rowland of John Hancock, Craig Trudell of Bloomberg News, Stephanie Roth of Wolf Research, and Jitanya Kandari of Morgan Stanley.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people are optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Base case is really that there will be a cut in December, a 25 basis point cut in December.
We have in our baseline that the Fed's cutting to 3.5.
They don't have to go too much further to be at the right rate for this level of inflation.
We're priced for strong growth and additional term premium.
The economy's in a really good space.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Two-part story this morning. Let's get to the first part first. Earlier on, 4:20 Eastern Time, a headline crossing the Bloomberg terminal. The Ukraine has struck inside Russia using Western missiles. That sent equities lower. We're recovering at the moment. Check this out. We're down 0.25% on the S&P 500. On the NASDAQ, we're down by only 0.1%. And in the bond market, yields were lower by about 5 basis points. This is what the Treasury looks like at the moment. The 2-year, 10-year, 30-year shaping up as follows. On a 10-year, we're down about 5 basis points, still at 436.28. As reports come out of Russia, Anne-Marie, that maybe the damage was pretty limited.
Right, but the knee-jerk reaction was immediate. And the knee-jerk reaction, potentially we could see again if we see another iteration of this potential tit for tat, whether or not it's ATACMS going to the border of Russia and Ukraine, and then that rhetoric coming out of Moscow and this edit of this decree when it comes to the nuclear posture. The issue is front and center, escalation is back, but also the market might be looking into this saying, is it escalation because potentially both these parties know that they may be forced to a negotiating table when President-elect Donald Trump gets into the White House?
That's the near-term story. Over the next few days, the attention's going to shift to the earnings in quite a big way. We'll hear from Target tomorrow, NVIDIA as well. Earlier on this morning, we heard from Walmart, and Walmart looking pretty decent.
Yeah, really increasing their expectation for full-year earnings as well as just sales you're seeing across the board, them gaining share from the likes of Amazon, but also other retailers. We've been talking all morning, is this a Walmart story or is this a broader consumer story? We were hearing from Joe Telsey, it's a bit of both. Those shares up 3.6%. But putting these two stories together, the Target, the Walmart, and NVIDIA, there's a real question mark. Are we going to see the proof in the pudding? of AI and some of the technological advancements. Walmart is gaining because of their advertising, because of their online shopping networks, because of some of the tech aspects. Do we start seeing the application as the AI story actually starts to take hold?
That's the story for tomorrow afternoon. Equities right now on the S&P 500 down by 0.2% and recovering. Coming up this hour, Emily Rowland of John Hancock as stocks move lower on geopolitical concerns. We'll catch up with Bloomberg's Craig Trudell as Tesla moves on news that Trump will prioritize autonomous driving, and Stephanie Roth of Wolfe Research on the long-term impact of tariffs. We begin this hour with equities lower and bonds rallying as Ukraine carries out strikes in Russia using U.S. weapons. Joining us now is Emily Rowland of John Hancock. Emily, welcome to the program. I want to turn to a quote that came from Lori Calvasina of RBC to kick off the trading week, and she said this about valuations and positioning and sentiment, that the U.S. equity market seems to have little capacity to absorb bad news. What have we learned this morning on that front?
Well, we've seen a modest bid, John, for some of the geopolitical hedges out there. You know, you're seeing the dollar strengthen. You're seeing gold catch a bid here. You know, notably, oil prices are still looking at WTI below $70 a barrel. So we saw a big move, of course, yesterday. That's moderated a bit today. And then, again, a modest bid for treasuries here. I think the treasury bond market has been focused on nothing but the potential for pro-cyclical policies under the Trump administration. So you're seeing a bit of a shift here, but certainly nothing that's overly notable here, given the prospects for heightened geopolitical risk.
When you think about all these issues on the table at the moment, Emily, it just feels like it might be U.S.-driven. In this case, a decision to allow Ukraine to strike Russia inside Russia with U.S. missiles, but it's Europe's problem. Likewise with tariffs. Tariffs ultimately Europe's problem. Does this just reinforce the view of U.S. exceptionalism into next year?
Well, certainly that's what markets are telling us. You know, we've seen massive outperformance from U.S. assets here. Again, that dollar strengthening trade. We've seen this almost speculative frenzy across risk assets in the United States, everything from cryptocurrencies and crypto-related assets to lower quality growth stocks. I think one of the things that we need to think about here is the consensus around the U.S. is so overwhelmingly positive right now. And when the consensus moves to one side of the boat, sometimes it can flip. So we want to think about, you know, potentially fading some of the move that we've seen into more speculative assets and redeploying assets into higher quality, more defensive options here, given the massive run that we've seen in more speculative assets.
So, Emily, sell Tesla, buy 10-year Treasury yields?
Well, you know, I think you got to own some of that stuff. You know, Tesla's certainly come a long way. You know, we look at, of course, the big event after the close tomorrow with NVIDIA's earnings. NVIDIA is the #1 high-quality stock. So we want to continue to embrace quality, and that's according to quality indices that we look at. We want to look for companies with great balance sheets, good return on equity, a good ability to maintain margins here. But I think the name of the game right now is really quality at a reasonable price. How can we think about embracing those quality companies but not overpaying for them? And so we're following the earnings. It's going to be really interesting to see if NVIDIA can once again deliver tomorrow.
Are we underestimating how much of a macro story NVIDIA is going to be? That basically this could be the main event of the week in a pretty significant way to send markets in a direction about if they can raise and beat in the same kind of way?
Yeah, I mean, I think it's just because of the sheer size of the stock, it's got to be critical. You know, I've been spending a lot of time with investors over the course of the last few weeks, contending with some of the issues around, for example, emerging market equities and what to do with them. Look, NVIDIA is 20 times the size of some of these markets. So that's why it's so critical here to portfolios. Again, we want to be there because the earnings have delivered and it's high quality. We've got to think about diversifying that exposure and finding areas of the market that are still going to give us quality, mid caps, industrials, for example, but that actually are trading at more reasonable valuations.
Emily, in your notes you talk about, and you're talking about here, that you push back against this consensus, this idea against higher inflation, higher growth narrative. Yeah. Then what do you look at when you think about these policies that potentially we're going to see next year, which many say they actually could be inflationary?
Well, Anne-Marie, I think potentially is the right word. And I think a lot of us have been saying the word potentially over the last couple of weeks here. You know, we looked back at the last Trump administration, and yes, there were some different dynamics from a macro perspective, but core PCE, which you know is the Fed's preferred measure of inflation, averaged 1.7% in the last Trump administration. If these tariffs are more targeted, you may see the impact to inflation be much more muted, maybe 0.1%. per a lot of the economists that we've talked to about this issue, the impact of these potential immigration issues actually are going to possibly weigh on growth. So we're looking at some of the things that the bond market's really not sniffing out right now. For one, wage growth is coming down meaningfully. Job quit rates are down, which should put downward pressure on wage growth and corporate profits. Housing supply is increasing significantly right now, which should cause that tricky shelter component of inflation to finally moderate in our view. And then the commodity story, which we mentioned earlier, if you're expecting some kind of 1970s boom in inflation, that has to come alongside higher commodity prices. And we simply aren't seeing it now, especially given more muted demand out of China. So we think every backup in bond yields represents a nice opportunity to lean into the income that's available, which is now close to 5% on the aggregate bond index.
Two policy proposals you didn't mention I'd love to get your view on. The idea of we're going to see tax cuts at the end of next year, and also that this is a president that wants to see deregulation throughout the Washington complex.
Yeah, so the deregulation story, I think you're primarily seeing in the outperformance of financials. Regional banks are on an absolute tear. Same thing happened post the 2016 election. That trade lasted for a couple of months after the election and then basically moved sideways. Not to say there wasn't value there, but really the bulk of the outperformance came on the news. We're also looking at corporate tax cuts, potentially, and that was very accretive to corporate earnings. If you look at the S&P 500 next 12-month earnings growth, you saw a spike in 2017 once those tax cuts went through. So I think investors are betting on that. The challenge is a lot of this great news, whether it's continued stock prices running, whether it's the economy doing well, a lot of that is in the price on the equity side, with the S&P 500 trading at about 22 times forward earnings, 27 times trailing, which is as expensive as stocks have ever been, third most expensive in history. So we want to think about the fact that, can we get much more multiple expansion? We've just seen a massive bull market that was all driven by multiple expansion. Earnings have actually gone pretty much nowhere over the last couple of years. That's the reason we're thinking about bonds. We don't think that they're priced appropriately for what comes next. Stocks are already there.
Emily, I have to say, what I'm hearing from a lot of different investors is a desire to try to get out from under the whipsaw headlines of, the Treasury Secretary race and whether we will get tariffs and how much or how not to, and all of these kinds of things, and figure out what you can lean into that's just sort of a constant. Is that basically what you guys have been doing? How do we strip out the signal from the noise and really figure out our strategy independent of what some of these policies might be?
Yeah, and Lisa, you're right. It's tough, and it might be a little boring to people to kind of try to stay away from some of the conjecture and think about what really drives markets over time. You look at some of the relative performance under the last two administrations, and it's actually exactly the opposite of what you might have guessed. For example, under the Biden administration, the best performing asset class by far has been energy. Probably not what you would have thought given the green energy policies that have been put in place. Under Trump, the first Trump, one of the best performing asset classes you could have owned was Chinese stocks. It's because we were in a period of global synchronized growth. That macro story was far more important than what was happening from a policy perspective. So we think if you can try to cancel out some of the noise, focus on earnings trends, focus what's happening from an economic standpoint, that's going to lead you to a better path forward as far as cross-asset performance.
We did just get Walmart earnings. We get Target tomorrow. We also get NVIDIA. We've talked about NVIDIA. Other than NVIDIA, is there an earnings story that you think is kind of a North Star of some sort of signal versus just simply noise?
Well, I think it's really about the broader story here, and the bar is just going up. Analysts are penciling in 15% earnings growth in 2025, and we think that's an awfully high bar given the fact that we're seeing decelerating growth trends. It doesn't mean that there aren't pockets of the market that can achieve that, but you've got to be really, really mindful here in terms of reaching too far for risk, and again, embracing those higher quality, more defensive options. We like areas like utility companies. We continue to like technology companies at a reasonable price. It's really about that internal market rotation and, frankly, finding an active manager that can identify those stories.
Emily, appreciate your time this morning. Thanks for catching up with us. Emily Rowland there of John Hancock. Started that conversation on America first, quite literally in the equity market. US exceptionalism. There's a joke on Wall Street that Europe is good for vacations and not good for investing in. United Airlines, seeing almost a 10% holiday travel surge to Europe year over year, a 30% boom versus 2019. European vacations surging on euro-dollar at 105.
100%. First of all, tipping isn't as high as it is in the United States, although if you do, you get, a lot of really incredible
There's no
tipping. Right, but, if you are someone who is generous and wants to really appreciate that good service. Anyway, moving on. I just want to note that, who isn't thinking about going back to Europe if you're basically talking about parity and essentially a 10% discount on your entire vacation? Just saying.
One investor recently told me Europe is an open-air prison with fantastic food and great art.
Who said that?
Michael Purvis.
Jeez, that's brutal. That is an open-air prison. You're allowed out. I'm here. I got out. You are allowed out. That's brutal. This came from United Airlines just moments ago. Rather brutal headline there from Michael Purvis as well. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Sources tell us that President-elect Donald Trump's transition team is considering former Fed official Kevin Warsh as Treasury Secretary and hedge fund manager Scott Bessent as the director of the National Economic Council. Trump was expected to make a decision on the Treasury job last week, but infighting between Bessent and Cantor Fitzgerald CEO Howard Lutnick reportedly irritated the incoming president, delaying his decision. According to people familiar, Lutnick is no longer seen as a contender for the role. Nestle shares are selling off in the European trade, down 2%. It lowered its profit outlook and announced a cost-cutting drive. The new CEO set out his plan to turn around the world's biggest food company. That includes separating its bottled water brands into a standalone business. Nestle has been struggling to build back sales volume growth after relying on price hikes during a period of inflation. U.S. tech curbs are preventing Huawei from creating more powerful chips for AI and smartphones. People familiar say the current processors and design use the same architecture that's been around for years. The people say that Huawei will be stuck with aging technology until at least 2026. The stall also hamstrings China's broader AI ambitions. And that's your brief, John.
Hey, Danny, thank you. More from Danny again to wrap up the news in about 30 minutes' time. Up next, the morning calls, plus Bloomberg's Trade Trudeau as Tesla gets a big boost on a report that Trump will prioritize full self-driving. Their stock is down by 1/3% from New York. This is Bloomberg.
We spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
The open about 1 hour and 13 minutes away. Equities negative by 1/3%. Let's get you some morning calls. First up, Piper Sandler downgrading Kraft Heinz to neutral, citing retail headwinds in the food service space. That stock is down 0.4%. Your second call from TD Cowen, raising its price target on United Airlines to 125, saying the airline is best positioned among its peers. That stock a little bit softer this morning, down 0.7%. And finally, Truist raising its price target on Nvidia to 167. The analyst expecting the chip giant to deliver better than expected earnings.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I will never keep my ideas to myself again after learning this. Hi there, visionary entrepreneur. Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel, reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
Manufacturers in the U.S., I'm thinking of GM or even Ford, basically at the same place.
Yeah, there's a really intense debate within the industry about how exactly to go about, trying to bring this technology to market, right? You have, companies like Waymo or Cruise, the GM unit, that have tried to kit out vehicles with really expensive hardware, really equip them also with really, intensive ability to process the data that comes in from those cameras and sensors, the radar and LiDAR sensors that are quite expensive, and to deploy those vehicles in sort of set areas with really sort of defined limits in terms of where they can go and can't go. That has proved effective at least getting these vehicles onto the road and getting them to the point where they're able to start charging fares for rides. They've clearly have a head start on Tesla in respect to commercializing in that regard. What Musk is trying to prove is that no, you don't need all of these expensive pieces of hardware. We just need to sort of over time improve my driver assistance software to the point where people don't have to pay attention, and eventually we'll be able to take the driver out. And he's pretty out there in terms of being of the view that can be accomplished, at least among folks who have been in this field a long time. They're quite skeptical of the possibility that you can sort of take shortcuts with respect to how intensive the compute you need is. Also the sensors, whether or not Tesla can rely just on cameras and safely deploy this technology, I think very much remains to be seen.
Greg, what is the model? Is it for the car manufacturers to sell these self-driving vehicles to the likes of a Hertz or an Avis or some sort of car rental company to kind of manage the platform, or are they going to ultimately become direct competitors with the likes of Uber and basically operate an entire system of self-driving vehicles that people can subscribe to?
I think this is also another aspect of this story that's really interesting, this sort of intense debate of will they or won't they being Tesla, need to turn to Uber or Lyft eventually. Musk has sort of, alluded to this idea that he will launch a competitor to an Uber and basically offer, a sort of half Uber, half Airbnb type model where, in the same way you use Airbnb to loan out your home, you could loan out your car to a Tesla ride-hailing app and make money off your car when you're not using it. We've seen, however, that Waymo and Cruise, they have recently done deals with Uber actually to deploy onto that app because of the expertise and capabilities that Uber can bring to the table with matching, ride demand with cars out on the road. And this is not something that is so simple. It sounds like something that a Waymo or a Cruise would be able to build up that capability, but they've learned through experience that it would work in their best interest actually to leverage what Uber can bring to the table. And I think if you talk with Adar Khosrowshahi about the likelihood that Tesla eventually gets there, I think they are sort of quietly confident that Tesla will find that this isn't as easy as Elon Musk is sort of leading everyone to believe.
Well, Craig, even if there's appetite from President-elect Trump because of Elon Musk to have this federal framework, it would have to go through congressional approval. So is the market just liking the idea that this man, Elon Musk, the CEO of this company, has proximity to power?
I think what this speaks to for the market is just, just a few weeks ago, Elon said he wanted this. A few weeks later, the election goes his way, and we're learning that this is a priority for the Department of Transportation. That speaks to this idea that absolutely he has Trump's ear. We don't have to even sort of rely on reporting to know that. We see him next to Trump on a daily basis. We see him at ringside at a UFC fight, at Mar-a-Lago on a sort of daily basis on his plane. So I think the market is sort of betting that surely this is going to pay off for Musk in the long term. Of course, we also need to sort of maybe temper our enthusiasm for that based on the way in which people who have gotten close to Trump have managed to find themselves on his bad side sort of at a moment's notice.
Had a massive move on that stock over the last week. Craig, appreciate your time, sir. Craig Trudell of Bloomberg. That stock is down this morning by 0.7%. This closeness, this relationship that the president-elect has with Elon Musk has been a big fuel for this stock over the past few weeks, few days.
Yeah, and the proposal that was highlighted by Bloomberg about the idea of a better regulatory framework to get autonomous driving vehicles on the road, really kind of turbocharging that. There are a lot of potential hurdles, and you have to wonder if it's going to help electric vehicles. You have to imagine it probably would help other auto manufacturers as well, unless there's a special carve-out just for Tesla.
One massive hurdle is going to be, if this is going to be federally regulated, it has to go through Congress on a bigger scale. But that proximity to power, President-elect Donald Trump's going to Texas today with Elon.
Stock has been up big time. Up next on the program, some breaking housing data. We'll get that for you, and we'll catch up with Stephanie Roth of Wolf Research and Jitanya Kandari of Morgan Stanley from New York. This is Bloomberg.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Equity futures right now on the S&P negative by 0.4%. On the Russell, we were down by more than 1%, recovering just a touch. We're off by 0.7. In the bond market, going into a sprinkle of economic data, 10-year yields are down by 6 basis points now, 4.35 on 10s, on 2s down by 5, 4.22. As we await numbers for housing starts and building permits, Mike McKee is with us around the table in the studio. He has that data right now. Good morning, Mike.
Good morning. Well, it's interesting you say a sprinkle of economic data because, of course, this stuff was infected by the hurricanes. But we do see a slight decrease, not a huge decrease, but 1,311,000 is the rate at which we are building housing, or at least new starts. Building permits are 1,416,000. That's down from 1,425,000. This is a 3.1% decline for housing starts and a 0.6% decline for building permits. And basically what we're looking at here is the hurricane effects. You can't build when everything is torn up. However, we are going to see a rebound from that in the future, so you can expect some good news. And the big question is, this is not the housing data that's going to really matter because of the hurricanes and the rebuilding, but wither real estate. The Fed cuts rates and mortgage rates don't go down, they go up. We did see a slight increase in home builder confidence yesterday, but everybody's wondering what's it going to take to get the real estate industry going.
Yields are lower this morning, at least, at the long end of the curve. At the front end as well, we're down 5 basis points on a 10-year. It doesn't really matter what we think about what's driving this. Of course, it does matter what market participants believe it is. It also matters what Fed officials believe is happening too. What's your takeaway on that? Why do Fed officials think that yields are up, that mortgage rates are higher, even though they've been cutting interest rates? What do they think is behind that?
They don't want to give a specific reason in public because of the political aspects of it, but basically they think the markets are reacting to what we're going to see in a new administration, that we're getting some inflation priced in, whether or not it happens. You're getting the uncertainty premium and you're getting inflation priced into these numbers. But the Fed admits there is a problem with housing in that housing mortgage rates got so low when the Fed was holding rates at zero that it's really hard to dig out of that because people don't want to change. And the costs of changing and moving into a higher mortgage, normally you get the people who are retiring moving out of their houses and everybody can move up. But people don't want to do that because even if they buy a condo that's cheaper, they're still paying a much higher mortgage rate.
Yeah, housing has been a huge kind of quagmire in terms of the driving forces and why prices haven't come down and why you aren't seeing more volumes. Just some of the straight inflation numbers, though, are really interesting. And I do want to bring this up because it came out at the same time and it's catching a lot of people's attention that Canadian inflation accelerated to 2% year over year in October versus the estimate of 1.9%. And I know that there's very much of a housing focus, but I wonder how much people are looking elsewhere outside of the U.S. to understand the global dynamic, or is it completely inward looking when it comes to the Fed and some of the economic data?
Well, it's somewhat inward looking now. You look at what's happening in Europe, and I was thinking of this morning when you look at inflation in Europe rising a little bit, and yet everybody's still predicting that the ECB is going to not only cut rates, but accelerate the cuts because of the impact on the euro from the Trump administration. And so what the U.S. is doing is driving the European housing market. Its mortgage rates there are going to be able to go down much more easily. Because of the structure of mortgages and the 30-year lock-in in the U.S. and in Europe, you're looking at 2-3 years at a time. So right now, when rates were going up, that was a bad time to be trying to buy in the U.K. or in Europe. And now going down, things will be better for them than for us.
When I first moved here and I saw Canadian payrolls drop across the Bloomberg terminal, I asked someone, do people care about the data in Canada? And someone just turned around and said no. And since then, for the last decade, I've barely touched Canadian economic data.
Do we really have to do this again? I care about Canada. I'm speaking to the Canadians.
I didn't say I don't care about Canada.
I think Canada is important. I respect it as a country. And I think that the inflation numbers are important as well, because it came in at 2% versus 1.9%, which really highlights that the global trend isn't as clear as people previously thought. Canadians, I've got you.
I think we're extrapolating things out a little bit too far. I love Canada. Just talking about the economic data. Michael McKee.
I'll give you one funny number here. We would expect a decline in the South for housing starts. Single-family starts down 10.2%. Single-family starts in the Northeast, where we are, down 28.7.
Wow.
And we haven't had any rain for months.
Yields are down at the long end by 7 basis points now, 454 on 30s on 10s, 435, 434.92. With us around the table is Stephanie Roth of Wolf Research. Stephanie, good morning. Any reaction to this data so far?
Yeah, I mean, it's an interesting one. And like Mike just said, the weakness came from the Northeast, which is kind of interesting. It bounced back. It came weak after a strong month in September. There's just a lot of sort of noise going on in the data. I think what we're going to see is the housing market's going to have trouble bouncing back with mortgage rates having increased after even the Fed has been cutting.
Why do you think rates have been going up even though the Fed's been cutting?
It's all about the election. And it's all about the market. Certainly, the market trades Trump as a yield curve steepener. We've seen that to some extent. There are concerns about the deficit. I don't think that's the primary driver. I think it's the market's getting excited about a better growth outlook. And for 2025, I think that's fair. For 2026, I'm worried about the tariff impact on the economy.
Okay. I'm trying to understand this. So if yields go up, makes mortgages more expensive, makes it more difficult for people to afford homes because prices aren't necessarily coming down. At the same time, we saw confidence yesterday among home builders rise to the highest level going back 7 months. And this whole idea is, well, because of the election, regulations will get stripped back and the economy will be doing better than it otherwise had been. So which is it?
I think there's an element of this animal spirits coming back. So you saw for NHB, it was driven by expectations. Last week, we saw Empire Fed increase a 3 standard deviation move. There's probably an element that people are feeling better about the outlook, right or wrong, but that actually has an important impact for the economy. And I think that's what's going to be driving an above-trend growth for next year until we start worrying about tariffs again. Probably not till the end of the year.
But why do you think the worry for tariffs comes at the end of the year of 2026, when that is the one thing we know that Donald Trump can do unilaterally?
So our base case is that, one, he probably wants to play this game with a number of the different countries like he did last time, have a number of meetings throughout the tariffs. We also think he'll probably want to attach it to some sort of investigation, which will require a comment period. And it makes sense for them to tie it to extending TCJA, whether or not they explicitly include it in a bill or there's a handshake deal about let's include the revenue savings for this bill. It makes sense for them to do it around the same time.
If they're connected to the tax bill, what is the true objective of these tariffs?
I guess it depends who you're asking. I mean, I guess from Trump's perspective, there's 2 benefits. I think they're pretty risky, but from his perspective, there's 2 benefits. 1, you can stick it to China, and 2, they can raise trillions of dollars on these tariffs, at least the way if you assume sort of static estimates here.
So you see both the good things and the bad things that the market has to digest when it comes to Trump policy being connected in terms of he wants to extend TCJA, he wants more tax cuts, and he's going to say, I'm going to pay for this with tariffs. So they all get rolled out at the same time. So the sequencing is actually in parallel.
Yeah, kind of. I think for now it's a better growth outlook for 2025, better confidence, And then we start getting into the 2026 tax cuts. And then I think it's a negative for the market. Because at that point, it's tariffs. And by the way, the tax cuts aren't really that large, right? They're expensive, but it's really just extending current policy. The incremental tax cuts that we're projecting is something like $500 million, which isn't that big. It's things like no tax on tips, or a very narrow corporate tax rate cut, which is really just for domestic manufacturers. The rest of it is just a very expensive bill to extend TCJA, which is not a stimulus for the economy.
So before we get there, and going back to home building, because I'm still trying to wrap my head around, okay, you've got the tariffs and how this affects inflation. I'm trying to get back to, does this cause a revival in the housing market at a time where everything that you just painted does not suggest interest rates going down that much at the long end? Can you see a revival in housing, in some of the basic staples that people have been basically complaining about that they don't have access to? Can you see a revival if you have mortgage rates that stay at these levels?
Probably not. It's a tough one. I think the part of the economy that's going to do better is on the CapEx investment side. So less about housing. I think mortgage rates are still going to be a bit of a headwind. Could see a bit of an improvement. The builders are excited from the regulatory front, and that's fair. But I think the bigger stimulus for the economy is going to be on the corporate investment side, because that's where the deregulation is going to be important, and the sentiment is absolutely critical.
Before you go, December, pause or cut?
It's a tough one. Base case is that they're going to cut. But I think it's fair for the market to be pricing 50-50. The most important thing is going to be payrolls. And we'll get a hint of that today when we get state employment at 10.
Payrolls coming out a little bit later, December 6th in the next few weeks, and then December 11th for CPI. That Fed decision December 18th. Stephanie, good to see you.
See you.
Thanks for catching up with us. Stephanie Roth there of Wolf Research. Let's check out the price action. A story of two headlines over the last several hours in the equity market. Futures are down by 0.5% on the S&P 500. Likewise on the NASDAQ 100. We dropped big time on the Russell 2000. The small caps down by 0.9%. We were down by more than 1 full percentage point earlier on this morning, initially following a headline that dropped at about 4:20 Eastern time, indicating that Ukraine had struck inside Russia for the first time using US missiles. Then we got a report, Lisa, out of Russia that maybe the damage was pretty contained.
Yeah, and there was more discussion around really how much is Russia going to go after with nuclear weapons, go after Ukraine, and I guess some of that has faded. What's interesting to me is that it's faded when it comes to the sell-off in equities. It hasn't faded in the bond market in terms of the bonds, the bid into bonds. So is this just basically an excuse? Can we make anything of this, or are we basically just tying ourselves in knots trying to create narratives at a time that's very messy?
Am I getting hate mail from Canadians now because of you?
I'm just getting love mail because of, my real recognition of Canada and the importance of Canadian economic data. I just want to say thank you and, appreciate your existence.
I'm Jonathan Ferro, and I endorse that message. Joining us now, Jitanya Kandari of Morgan Stanley. Jitanya, good morning to you. We'll leave the Canadian story right there. I want to talk about this bond market. Yields are lower. We're down 6 basis points across the curve. We're down almost 7 at the very long end of the Treasury curve. The equity market rally has stalled more recently. Is the election shaping up to be a sell the news event, or is it still a little bit too early to make that call?
I think it's a little bit too early. There is a lot of the Trump trade that has already been discounted. I think focusing on fundamentals is key. And for me, when the 10-year yield reaches a real rate of 2%, that is tightening in financial conditions. Just given 2-year on real rates will be very heavy for an overly indebted U.S. economy. So I think there is anyways a mean reversion trade at 4.5% plus in the 10-year.
So are you buying 10-year or are you selling stocks?
So I think we're really fundamentally driven. So we do like stocks at this point, clearly because, again, if you think about what's happening on the tariff side, I think there is too much linear thinking in the market, that Trump equals inflation, equals tariffs, equals, all the issues that the market's pricing. And I think you really need to be discerning. We definitely like certain structural pockets of the equity market, whether it's financials, whether it's industrials with the industrial recovery in different segments like defense, electrification, automation, and also within technology, there are changing trends between the semis and also on the software side. So clearly in stocks, We like the 60-40 allocation even at this stage, along with alternatives which give you good geopolitical hedges, be it gold or be it even energy, which can be a nice hedge in the portfolio.
So we can get to the whole 60-40 and the idea of why bonds still offer that offset. But before we get there, you're talking about sectors and being very strategic and looking at fundamentals. This year, the fundamentals were GLP-1s for a hot second. That was going to totally transform the world and that we all were going to be skinny and fabulous and we're going to eat. And then there was this idea of AI and just the overlay. What are the narratives going to be that are going to drive some of thematic investing in 2025?
Yeah, so I think it's firstly, we need to understand the IT space, right? The technology space. The theme has been semiconductors, semi-equipment, because they are the picks and shovels and they lay the infrastructure for this new technology revolution. Now, also understand that these are some of the stocks that have come under the tariff war. So it's time to really move into some of the defensive parts of technology, which is software. Where will the value accretion and creation happen with all the infrastructure laid down by the semiconductors? So whether it's cybersecurity, whether it's industrial software or enterprise software. So we're beginning to kind of pivot towards some of the software names. The industrial policy in the world has secular legs, whether it's defense, which is a nice geopolitical hedge, electrification, which is, we are in a power deficit world. Everywhere you go, there is a power deficit. Whether you want to build semis, whether you want the data centers, you want industrial automation, we can clearly be invested in secular power or electrification.
So you see opportunities besides U.S. exceptionalism? You see opportunities in global equities?
We see, yes. Even within the U.S., as I said, there are opportunities outside the leaders of the last decade, whether it's financials, as I mentioned, even within the overall software space, we are beginning to see differences.
So where around the world?
So I'd like to say one thing. So let's think about where does U.S. have trade deficits with, right? It's China, it's Mexico, it's EU. These areas will be volatile. Actually, volatility gives opportunities. Where does the U.S. have surpluses with the countries, right? It's UK, it's Australia, it's Singapore, and many other countries. Some of these spots look pretty okay and not volatile. UK is a market we're beginning to like, and we talked about it last time as well. Given EU will want a deal with UK, US has a unilateral deal with UK. UK is going to try to do all it can on the export side. They can't do much on the fiscal side. And generally, a lot of the negatives are behind them. Emerging markets, I mean, they are benefiting from the China-US trade war and some domestic demand economies that are not really geared to the export and global trade side of the world, be it India or be it pockets of like Indonesia. Lots of interesting opportunities. And as I said, in Europe, we really like the industrial theme because it really plugs into all these global secular trends that have legs.
Jitanya, it's good to see you. To catch up, thank you. Jitanya Kandari there of Morgan Stanley. Some relative outperformance in the UK. As we mentioned, the FTSE 100 only down 0.4%, with the rest of Europe getting hammered. The DAX in Frankfurt, Germany is down about 1.3%. With an update on stories elsewhere with your Bloomberg brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Walmart shares are up 3% pre-market after it posted a beat on its top and bottom lines. It boosted its outlook for the year, citing strong demand from U.S. consumers across the income spectrum seeking value. Households making $100,000 a year or more drove a significant portion of the company's growth. Customers bought more at each visit. The company also saw strong growth in e-commerce. Online sales now total about 18% of Walmart's total business. Blackstone has agreed to buy the sandwich chain Jersey Mike's, confirming earlier reporting. Financial terms of the deal weren't disclosed, but people familiar said the value stands at about $8 billion, including debt. The company said that Jersey Mike's founder and CEO will maintain a significant stake, and the deal is expected to close early next year. Super Micro shares rallying some 23.5% pre-market. The server maker has hired a new auditor and filed a plan to come into compliance with NASDAQ listing requirements. If Super Micro's plan is accepted by the exchange, its new deadline for the document will likely be pushed to February. It will be able to stay listed on the NASDAQ until a final decision about its compliance is made. That's your brief. John.
Hey, Danny, thank you. Some headlines just crossing the Bloomberg terminal from the Russian Foreign Minister Sergei Lavrov, speaking from Rio, saying this, that the strike earlier on this morning is a signal of escalation. Lavrov going on to say, I hope the West will study the Russian nuclear doctrine. Bond yields near session lows. More on that story in just a moment when we catch up with Bloomberg's Ollie Crook, live from Europe, from New York. This is Bloomberg.
Many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
The opening about 38 minutes away. Your trading diary, the calendar shaping up as follows. Today, you get some more Fed speak from Schmidt. Tomorrow, more remarks from Cook and Bowman, plus earnings from Target and the big one, Nvidia. On Thursday, we'll get another round of jobless claims and more comments from Goolsby. On Friday, S&P Global PMIs and UMich consumer sentiment. As we count down to that opening bell, equity futures near session lows. Bond yields down 7 or 8 basis points as we all keep an eye on the latest out of Ukraine as the country carries out strikes in Russia using U.S. weapons. Bloomberg's Ollie Crook joins us now for more. Ollie, good morning to you. What's the latest from the region?
Yeah, absolutely, John. So this is the first attack that we've got since Biden gave that sort of consent for the Ukrainians to use those American-made deep-range attack weapons within Russia. But the question is where this was basically permitted to strike. The real ambiguity comes around the fact that this was not struck within the Kursk region. This is what has raised a few eyebrows. This has gone a little bit further into the sort of Ukrainian, into the Russian field. This is something that is potentially concerning a lot of people, potentially when you have also Sergei Lavrov, the foreign minister of Russia, speaking right now at the G20 summit, saying that the use of the signal is a signal of escalation. He hopes that the West will be studying the Russian nuclear doctrine. The reason that he mentions the nuclear doctrine is because within minutes of these reports, we also got an update from that nuclear doctrine from Vladimir Putin, signing it into law, signing a decree that allows Russia to fire nuclear weapons in response to a large conventional attack on his soil, saying that Kremlin will view aggression against Russia by non-nuclear state-backed as a nuclear power, as a joint attack, not really drawing that distinction between the two things. So if it is just the Ukrainians striking with the American forces, this is something that Putin will consider potentially under this new doctrine a joint attack.
We also have Sergei Lavrov saying Scholz's position on Taurus missiles is responsible. Oliver, how divided is the German and U.S. stance right now?
What is very interesting about the German stance is that it has been basically follow Biden, follow the United States from the very beginning. At first, the Germans did not want to deliver tanks. The second that Biden said, okay, we will deliver tanks, the Germans followed. That has been basically the pattern throughout this entire conflict. That has changed over the last few days, where Biden has allowed for these ATACMS to be deployed by the Ukrainians within Russian territory. Scholz has been asked about this at the G20 meeting repeatedly over the last few days. He says, no, this is where we draw the line. I just spoke to a German lawmaker earlier today, just a few hours ago, saying that he basically completely disagrees with Scholz's position, and that is also not the position that is held by the CDU, Friedrich Merz, in opposition, who is likely to become the next chancellor of Germany, who has said from the very beginning that there need to be these deliveries to the Ukrainians to strike within Russia. Of course, what hangs over all of this for all the policymakers here in Europe is the Trump presidency, and what's for all the policymakers here in Europe is the Trump presidency, and what say will they have in the sort of end of this conflict, potentially this resolution, and this at a time where you have this sort of German government in complete upheaval and real disagreement on how to move forward, and potentially before this election, the Bundestag could move to deliver those missiles even in opposition to the chancellor himself.
Oliver, just quickly here, I'm wondering, what is the level of fear among some of the German lawmakers and other Europeans you're speaking to about the use of nuclear weapons?
Well, it will just really depend on the different parties. So you have, I think, the majority of the mainstream parties, with the exception of Olaf Scholz's party, the SPD, who are saying, listen, we need to be strong. We need to, in the face of this sort of the attacks of the Russians, you need to make these deliveries. There are, however, on the fringes, the far right and the far left, and these are two groups within the sort of German political system that have really gained in importance going into this election. They do not want to see more involvement in Ukraine. They want to see it sort of step back, and they want to see the German government get basically disentangled, and they're going to be increasingly a part of the conversation in domestic politics here in Germany.
Ollie, appreciate the update, sir. Ollie Krug there of Bloomberg out of Berlin this morning. Stocks near session lows. We're down 0.9% on the S&P 500. Coming up tomorrow, your lineup looks like this. We'll catch up with Julian Emmanuel of Evercore. We'll speak to the former World Bank President David Malpass about the race to be the next Treasury Secretary. Pierre Ferragu of New Street Research looking ahead to NVIDIA earnings after the bell tomorrow. And we'll speak to Matt Lazzetti of Deutsche Bank as this bond market receives a rather large risk-off bid. Yields are down 7 basis points on a 10-year, 434 from New York. This was Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the
My name is Konstantin Stefana. I am the owner of a family office and the company called Company I Limited. I also have a live streaming channel for startups. It's SG Trader. So anybody, we let startups to pitch investment community on our channel. I give them 3 minutes pitch. We publish their video on our channel, and everybody who interested, please welcome to send me your video, and I will roll for almost a month your video for all financial community. The channel is live, it's streaming live 5 days a week, from morning to night.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Futures are down almost 1% on concern about a Ukrainian invasion into Russian territory and Vladimir Putin's threat of nuclear expansion thereafter. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Sonali Bassett. Katie Greifeld is off today, and Bloomberg open interest starts right now.
Coming up, Ukraine reportedly carried out its first strike in Russia using American-made missiles. Meanwhile, Vladimir Putin fires a warning by approving expanded use of nuclear weapons. On the earnings front, Walmart is up after boosting its outlook for the full year on strong spending from value-seeking rich people. Plus, a Bloomberg scoop: the Justice Department may force Google to sell its Chrome browser in an historic antitrust crackdown. But first off, let's take a look at where the markets are trading. You're going to see big losses in futures. S&P futures down 1% now. And I wanted to show on this cross-asset board some other examples of people seeking safety. So obviously, they're buying up the 10-year. They're really buying bonds across the curve in terms of treasuries. That's pushing the 10-year down to 434. Remember, at this time yesterday, we were at 446. The U.S. dollar is gaining ground against most currencies, but losing some ground against the yen. So we were at 156, almost 156 yen. Now you can only buy 153 yen as investors pile into that safe haven currency. And then Bitcoin, I don't know if it's a safe haven, but at one point it was up about 1.5%. Now it's back down under 92, almost $91,000 even. Gold was up as well. I just thought it'd be interesting, Sonali, to take a look at digital gold here.
Yeah, still at 91,000 though, and of course we're going to talk about options as well on some of those Bitcoin ETF products, but still down. Not quite a safety trade today. Want to take a look at those individual movers, as Matt has been talking about Walmart higher after boosting its outlook for the year due to strong demand from U.S. consumers, particularly consumers making more than $100,000 a year. You have Walmart now up about 1.5%, still up less than it was up a little before in the pre-market, though. Looking at Google as well, Alphabet shares down 1.2% pre-market on that news that the DOJ is planning on pushing for it to sell its Chrome browser. And of course, that DOJ story gets very interesting with the change in administration. We will keep an eye on all of that for you. Also watching Supermicro soaring after hiring a new auditor and filing a new compliance plan to NASDAQ. It is now up 25% nearly pre-market, Matt.
All right, now my man Dan Curtis, Shanali, sent me a chart this morning that I thought was pretty fascinating, showing what happens to Walmart stock during recessions. It goes higher because value seekers shift down from, I don't know, Whole Foods or DeCicco's or, wherever they're shopping at expensive places and look for less expensive places to buy food and stuff. Now we're seeing that stock do the same thing, but we're not in a recession, right? GDP is growing at a 3% clip about, and yet inflation has pushed higher end shoppers away from those higher priced stores into Walmart, and the stock's rising.
But I think one thing we were talking about this morning that is a really important element of this is that more than 80% of Americans make less than $100,000 a year. So if that cohort starts to weaken, what else weakens along with the economy? We know that it has been weaker. And also you look at stores like Dollar General, for example, very steep sell-off this year. And so it's telling you that maybe less than 20% of the American consumer is holding up. What about the rest of it?
All right, we're going to focus on all those single stock stories in just a moment, but we've got to go back to what's driving the moves in the bigger market. The latest escalation in Russia's war against Ukraine is making traders anxious. Joining us now is Ira Jersey, Bloomberg Intelligence Chief U.S. Rate Strategist. And Ira, we see it across the Treasuries curve, right? Investors are buying bonds, pushing yields down. And I'm wondering, what are the limits that you're watching?
Yeah, so the next big level for 10-year Treasuries is around 4.2%. We did bounce right off of that 4.5%, which is a really important technical level. We did that yesterday. Momentum was slowing before that, so there were some technical reasons to think the lowest, the path of least resistance was to lower yields and Treasuries to rally. And of course, the headlines overnight just pushed that over the edge. Interestingly, you look at where German yields are trading and the like, and they're rallying a little bit too, but not like Treasuries. People really do seem to want the safety of Treasuries, given the escalation in Eastern Europe.
Until this point, until you had to worry more about geopolitical risk, Ira, you did see such a large sell-off in the bond market at the longer end of that curve, and you are seeing that bid re-enter the long end on the heels of the need for a haven trade. What is the push-pull going on in the Treasury market here that could actually maybe create a floor on the 10 and the 30-year?
Yeah, so I do think that there's probably a limit of how much Treasuries can rally from here, where we wind up seeing, yields may be closer to 4%, and that's based on just U.S.-centric growth and economic data. So, the big reason why we did have that 100 basis point or so sell-off in 10-year Treasuries is really that we've priced out a lot of Federal Reserve interest rate cuts. Keep in mind, we're pricing now for rates to be cut only to 4%. It sounds like a lot because it's another 75 basis points worth of cuts from the Fed, but we were pricing for cuts all the way below 3%, right? So that shift in Fed expectations is really what drove Treasuries to where they are now. And without a significant change in the economic trends in the U.S., I think it'll be difficult for Treasuries to rally, more than another 30 to 40 basis points just on a flight to quality trade. You need to have some shift in economic expectations before you can draw in, basically economic buyers of Treasury securities.
We're getting headlines from a Biden official right now saying that Russia has been signaling nuclear intentions and that that is more of the same irresponsible Russian rhetoric. Again, this is coming from the Biden White House right now. But the bottom line, Ira, is, investors are going to be leaning more towards stocks. I've been asking a lot than they are towards Treasuries and bonds. Obviously, they'll own both, but into a Trump administration, into the potential of rising tariffs, into the potential of tax cuts and deregulations, don't you hear more clients that are shifting the bulk of their investments towards stocks from treasuries?
Well, some asset allocators certainly are going there, but keep in mind there is a very large institutional and kind of captive base for people who have to buy fixed income securities. So while yes, people have been lightening up on Treasury securities on the back of better economic data, people thinking maybe some of Donald Trump's policies will be pro-growth, you also have to take into account that there's a large pool of money on the sideline that would like to be able to buy 30-year treasuries at a 5% yield. So you do see that and manifest itself in things like long corporates, right? So spreads on long corporate bonds have tightened quite substantially, especially when you get to yields at 5 to 5.5%. And as you get 30-year treasuries up toward 5%, you do see buying of things like treasury treasury strips as well as long treasury securities. So I think that there's a limit, but I agree. Right. There are some people who are certainly allocating a little bit more toward riskier assets and away from treasuries.
All right, Ira, thanks very much. Ira Jersey there, our chief rate strategist from Bloomberg Intelligence. We are getting more headlines, I imagine, from the same Biden officials that said Russia has been signaling nuclear intentions, just reassuring us that the U.S. won't respond to the Russian nuclear doctrine move. That's a big statement, the U.S. indicating it won't respond to a Russian nuclear doctrine move. I don't know if that means they simply won't say anything about it, because it seems like they have said something about it already, or they won't make an official response in terms of...
This morning has been a significant escalation. You have to wonder if this is to contain that escalation. At least right now you have the equity market still down about 0.8%, but reacting just ever so slightly more positively to the idea of less tension here.
Yeah, letting maybe a little bit of pressure out. Joining us to talk about the stock situation right now is Jack Janasowicz. He is Natixis portfolio manager and lead portfolio strategist. Jack, great to have you on the program today. We have seen all of the gains, the post-election gains from the Trump optimism kind of get faded in the stock market. Do you think that turns around into year end?
First of all, thanks for having me back, Matt. And, I think it's normal to have a profit-taking session. And I think right now the market's really in search of a catalyst. And I think some of those catalysts are a little bit of a timing issue, right? On the economic side, you probably are going to be paying a lot of attention to that upcoming payroll print on the 6th of December, some of the CPI data, the inflation data. And then from an earnings expectations perspective, you're probably looking at NVIDIA. But in between now and then, you have somewhat of this information void, which then forces us back to really focusing on the geopolitical stuff. And that has been, over the last couple of days, cabinet appointments, and obviously today with the saber rattling with Russia and Ukraine. And I think that's what's giving us a little bit of an impetus to even take more profits and chips off the table in here.
How deeply do you take those chips off the table? Of course, there was a large distraction with the U.S. election, and all eyes had turned to it. And today was a reminder, of course, that there still are very significant geopolitical conflicts going on. Are investors ignoring them too much at their own risk?
I think historically speaking, a lot of these geopolitical headlines tend to be short-lived, and we would even argue offer up a pretty good entry point here. So, I don't think I would be adjusting portfolios. And if anything, if you had a longer-term view in here that you were looking to add, this is actually going to provide you with a pretty good entry point, especially as we look into the rest of the year with seasonals being fairly supportive.
I mean, you got to buy the dip here, right? If there's really a U.S. versus Russia nuclear threat, don't you want to go out owning stocks, Jack?
I think if we're going to worry about that, you probably, you want to go out owning stocks, go out with a bang.
What stocks do you want to own here? I mean, when you look ahead to the potential of deregulation, a lot of people have, for example, pointed to energy. Obviously, bank stocks have rallied pretty wildly. And then there's questions about big tech. I mean, does the next Trump administration treat big tech well, or do they continue to, block moves there? What do you think?
So, I think we're sort of in a somewhat tightened range, if you will, right? Because I think some of the optimism on the growth perspectives with regard to the Trump administration might be a little bit overdone, because you're going to get some self-governing mechanisms in there probably with regard to the Treasury market. And on the flip side, though, you're probably putting a floor underneath growth because of those pro-growth strategies, as well as the, I guess, Powell put in place. So with that perspective, we certainly expect economic growth to slow at the margin, but not slow to a point where we're really getting a recession call back in. So as a result, we still think a barbell works in here, right? You want to own some tech in here, and you also want to own cyclical value, which means you still want to own some of those financials. You still want to own some of the industrials, to a lesser extent, maybe the materials complex. But to us, it's that barbell that we continue to like as we head into the end of the year and into the first quarter of next year.
I'm going to be kind of the inverse to Matt, as I always am, and play a little caution here. You know, when you think about the things that are in your portfolio that are hedging at this juncture, is it bonds? Is it gold? Is it in the options market? I mean, do you need safety or do you just need diversification?
You need a combination of both, and I think what's good to see right now is that you are getting that negative correlation with regard to the bond market and equities. So, that portion of the portfolio is going to help give a little bit of that equity risk offset. And all the while, when you're looking at a yield on 10-year of whatever, 4.30-ish, it's also going to give you a little bit of contribution to your total return as well. So, I think it's still keeping in mind that the fixed income portion of your portfolio, and specifically treasuries, do offer that equity risk offset. In times like this is a great reminder that it's there to help.
Jack, thanks so much for joining us. Jack Janasiewicz there of Natixis talking to us about today's moves. Let's get a look actually at futures. We are just about 17 minutes away from the start of stocks trading here in the U.S. markets. S&P futures are still off 0.75%, so a little bit better after the U.S. indicates it won't respond to Putin's nuclear expansion there. The NASDAQ futures off just about as much, and Russell 2000 futures, although they're down 1.25% and leading the losses, also getting a little bit better in terms of the look after that headline. Coming up, Walmart's value proposition is resonating with more and higher-end shoppers. More on that company's latest result and Lyft next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I think we're...
Go.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get now to high interest. Look at what's making headlines around the world. The top U.S. prosecutor in Manhattan has privately told people he's going to step down before Donald Trump is inaugurated in January. Damian Williams has served as U.S. Attorney for the Southern District of New York since 2021. He oversaw indictments against FTX's Sam Bankman-Fried and Archegos Capital's Bill Wang, among others. JP Morgan nudged British regulators to investigate the links between former Barclays CEO Jes Staley and Jeff Epstein. A court was told that JP Morgan informed the Financial Conduct Authority in November 2019 that it identified various documents that showed the relationship between the former JP Morgan exec and the late pedophile financier, ultimately leading to Staley's exit from Barclays and his permanent ban from the UK financial services industry. And Pershing Square Capital founder Bill Ackman is reportedly seeking to sell 2 of his New York City apartments at million-dollar losses. Ackman bought 2 3,000-square-foot apartments in the Upper West Side for $22 million in 2017. Now, 7 years later, he's looking to unload them for just under $20 million for the pair. Shonali?
A lot of tough New York City real estate news out there. We were also looking at the Bank of America tower losing value too. We'll keep an eye on it all, but we're going to switch gears now and talk about the consumer. Of course, Walmart boosting its outlook for the year. The discount retailers seeing strong growth, and it's driven by upper income households, people making more than $100,000 a year. Joining us now, Emily Cohn, Bloomberg consumer editor. And you look at who is buying, but how about the aggregate? How much is the company actually growing here in terms of the tickets that are being brought in?
Yeah, so what we're seeing here at Walmart is obviously the bulk of the growth, as you mentioned, is coming from higher income shoppers. So households that make over $100,000 a year. Across the board, growth is consistent. The bulk of the growth is coming from wealthier households. So that means it's really interesting. It's people who might be shopping elsewhere, higher end stores, generally in a tough economy, are going to Walmart because they know there's value there. In terms of transactions and ticket growth, transaction growth is actually slowing, so the rate of growth is lower than it was a year ago, but we're seeing average tickets, so the amount each person is spending at the checkout is higher than it was a year ago.
Yeah, the moves are really interesting. Shonali was pointing out this morning, I think Dollar Tree is down like
more than 50%.
By half, more than half year to date. Meanwhile, Walmart is up 60% year to date because they're attracting those shoppers from the upper end. What are they buying? You know, I saw that AirPods, TVs, tires are selling, but I imagine groceries are the main sale.
Groceries is huge for Walmart. I think that's about 60% of its business now. That's obviously been a big part of growth for them. Especially with deliveries becoming more and more a part of their business and how it works. But groceries, home goods, toys. One of the themes today was that the holidays are off to a really strong start. Holidays this year, the holiday shopping season is about 5 days shorter than it typically is because Thanksgiving is falling later in the month. So what we saw Walmart and other retailers do is shift those sales earlier in the month. I think the season now starts in October. And so we got a glimpse of that today. We got some early positive indicators that the holiday season is off to a strong start. And that's part of the reason why they lifted their outlook for the rest of the year.
And Walmart, of course, such a behemoth. I want to show also JM Smucker shares this morning because they are rising significantly on the back of this Walmart report. I didn't realize this. They had about a 33% revenue exposure, according to Bloomberg Intelligence, to Walmart.
That's where people go if they want to buy jelly. When I'm thinking jelly, I'm going to Walmart.
And peanut butter. Jif is a brand too. Anyway, so, you know, when you think about also what's happening over at Lowe's, what's happening there versus at Walmart?
Yeah, so at Lowe's, things are tougher. What we're seeing there is more a reflection of how the housing market is doing. People are moving less than they used to do. People are spending less on big ticket appliances, big ticket renovations in their homes. So Lowe's is really suffering. Quarterly comps were better than expected, but continue to fall. So this high interest rate environment is really squeezing retailers like Lowe's, and we saw the same with Home Depot last year. Despite its gloomy sales, it actually did raise its forecast for the year, seeing positive growth from its professional business, e-commerce, and spending on smaller ticket outdoor projects. Last week, really interesting, we saw Home Depot raise its forecast slightly, saying that warm weather and the extreme weather, hurricanes, was good for its business, seeing more purchases of grills because the warmer weather season is getting longer. So those are some bright spots for businesses like Home Depot and Lowe's that are otherwise suffering in this higher interest rate environment.
Grill from Home Depot, chicken from Walmart. I think that's the story.
But you can't buy jelly at Lowe's or Home Depot.
You could buy it at Walmart.
Yes. Okay. Good. So we know that Walmart is doing better in this market. Everybody else is doing worse today. Emily Cohn covers retail for us. When we come back, we're going to talk about what's going on in this stock market and Biden's DOJ push to split Google from its Chrome browser. We'll have more on that Bloomberg scoop coming up later this hour. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, we are looking at futures that are down right now. Not as much as they were at the top of the hour, but still 0.7% on S&P futures. NASDAQ doing a little bit worse. Small caps doing far worse, down a little bit more than 1% in terms of Russell futures. Obviously, it's the Ukraine news that is making traders nervous today after missiles were launched into Russian territory. Those missiles, the Russians claim, were made here in the U.S., or at least by the U.S. company Lockheed Martin. We're talking about the, the Army Tactical Missile Systems 500-pound warheads launched into Russia.
Yeah, very significant. And it's interesting. You take a look at the trade that's happening under the market. Not only is it defensive, but the defense stocks are generally up. Lockheed Martin up more than 1% pre-market. RTX up more than 2% pre-market. Let's see how the story goes once the market opens.
Absolutely. We're coming back with the opening bell in just 2 minutes' time. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you were the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
We are moments away from the start of trading in U.S. markets, and futures are lower. Welcome back to Bloomberg Open Interest. I'm Matt Miller. You're looking at drops not as severe as we saw earlier after Ukraine fired American-made missiles into Russian territory. S&P futures are down 0.6%. We had been down 1 full percent. You do see it more on the small caps. Russell 2000 futures down more than 1%. Take a look at who's ringing the bells today. It's not always, I grant you, terribly interesting. But Jeremy Grantham is ringing the bell at the New York Stock Exchange, celebrating the 1-year anniversary of his ETF, the GMO ETF. I think Quality is the name. At least that's the ticker QLTY. It's slightly underperforming the S&P, but only by a couple of percent. So it's up like 27. The S&P is up 30%. You've got Veeco ringing the bell over at the NASDAQ. Veeco Instruments actually down year to date. They were doing well up into the summer, and now they're off about 15% year to date. Nonetheless, they seem terribly pleased. Let's get a check on the major averages as we kick into the first minute of trading right now. We are looking at, obviously, drops here. 0.5% on the S&P to 58.62. So we now have seen only about a 1.5% gain since the November 5th election on the major on the benchmark index. NASDAQ down about 0.5%. The small caps down a little bit more. In terms of stocks to watch, you've got really up arrow stories in terms of the single stock stories. Walmart, right, doing better than anticipated as usual on sales, but also raising its forecast for the full year. You can see the stock up 3.6% in a down market. So I think, Shonali, that really says a lot about how much investors value Walmart at this time.
But you had a really interesting point earlier that you made about recession-proof Walmart, that it does well even in recessions. I've got some down arrow stories over here, Matt,
Thank you.
that are not tied to geopolitical conflict, but are tied to the U.S. government. We're keeping an eye on Google, the DOJ pushing the tech giant to sell off its Chrome browser to break up its alleged monopoly, but you only see Alphabet now down about 0.1%. It is erasing some of those losses on the morning. Also watching Supermicro soaring after hiring a new auditor and filing a plan to come into compliance with NASDAQ listing requirements. Supermicro now up about 23%. We're also going to take a look at defense stocks because the latest escalation in Russia's war against Ukraine is rattling markets. We have Bloomberg's Abigail Doolittle here for more on that.
It certainly is rattling markets, Shonali. We have the defense contractors this morning higher, although not as high as maybe you would expect given the headlines of Ukraine launching U.S. missiles in Russia and also President Vladimir Putin's decree allowing Russia to use nuclear weapons in a wider variety of situations. On those headlines, it wouldn't be unreasonable to see these stocks up even more. Nonetheless, green on the screen. Let's put this into the perspective of the longer-term picture, though, and we will see here going back to winter of 2022 and roughly the start of that war. What we're looking at here are some of the defense contractors. In purple, we're looking at SPY. In yellow, we're looking at Boeing, not a defense contractor, but certainly a big piece of their business is military. And the defense contractors really basically doing just right what the SPY is doing, whereas Boeing clearly underperforming. But there is one defense stock or ETF or asset that is outperforming, really shining, Matt, and that is gold. Take a look at GLD over the last year, hitting that record high not so long ago, and on the morning taking a tick higher, but up on the year 32.3%.
Yeah, so big gains there for gold. Obviously, well, I shouldn't say obviously. You would think it's concerns about inflation that drive gold higher, but inflation has been contained to some extent throughout the length of that chart, and yet it's a huge run-up.
Well, you have central banks buying gold at a greater pace across the world. It's a huge trade. Yeah. David Einhorn is sitting smiling somewhere.
Yeah, absolutely. Central banks buying is really, we've been told on a number of occasions, really the driver. Let's talk to Nancy Dowd right now. She joins us from Ameriprise Financial She's a private wealth advisor. Nancy, great to have you on the program again. Last time you were here was pre-election, and we were talking about the gains that we would see. Certainly in the first week, we saw some real gains. We've sold off, to some extent, the lion's share of those gains. Do you expect that we get that back, that optimism on deregulation, on cutting taxes? Does that come back into the S&P through year end?
Well, I believe, yes, that most likely it will because of the season. You know, year end is usually pretty strong. But let's, talk a little bit about post-election. There was this. First of all, the first emotion was relief, like, thank God it's over, regardless of which side it goes to, because I think we can all agree that election seasons have become very prolonged and quite exhausting. So that was one reaction. The other reaction also is that markets like more predictability versus uncertainty, and with the White House, the Senate, the Congress being aligned, there's a little more predictability. Markets clearly like less regulation, less taxes, and the unleashing of energy as has been promised. But like all knee-jerk reactions, the market corrected because, okay, we're back to reality. And the reality really has to do with most of this was priced in before the election. And it's time to really look at the math now.
Over the past week, you've seen the market reacting to a lot of realities. For example, the differences in regulation and policymakers. But what about today? For example, you're seeing the market react to geopolitical realities. But do you buy into the dip that you're seeing? Do you, what is it? What is the saying? When others are fearful, get greedy?
Be greedy, yeah.
Be fearful when others are greedy, and be greedy when others are fearful. I think that we're bound to see volatility. I think what's happening today is a reminder that, hey, we still have a lot of geopolitical risk out there, and the new administration has not taken office yet. So there's still a lot of room for some crazy things to happen. However, this is the season for pension contributions and consolidation and rebalancing, and most importantly, tax harvesting. So there will be some volatility, some selling and buying. And I think that if you've been on the sidelines all along, you've missed out a lot. And with the longer-term outlook, you're going to miss out even more if you don't get into the game.
Yeah, I think Bloomberg has done some research and found that in the last quarter, you typically get a 4.1% gain. And then you mentioned tax loss harvesting. Investors use those gains to maybe go and buy back some similar shares in January, so they get the January effect. And then we'll have Donald Trump in the White House, and as you mentioned, it was a red sweep, so he's got the House, the Senate, and the White House, but thin majorities, right? So can he get everything passed that the market is hopeful for?
Well, we're going to find out. Yeah. However, with all three aligned, there's a little less gridlock, a little less politics, not much. There's always going to be uncertainty, but it's less uncertainty than prior, had we had a divided government. The biggest beneficiaries of all of this will be the financial sector, energy, and of course technology in the longer term. You know, the unleashing of the energy is going to be great. These are the sectors that love deregulation. And as I always say, AI, it turns out that AI requires a lot of power, so the energy will be a big factor here.
When you think about the potential policymakers, one thing we talk a lot about on this program is what about the anti-competitive policymakers, the FTC, the Department of Justice? You're looking at the market, at least initially today, react on this idea that Google could maybe be broken up in some fashion. But would the Trump administration look to do similar things?
Well, I think there will be some deregulation, but maybe not to the extent that everybody thinks. I mean, the worst thing that could happen is the pendulum swings to the opposite end of the spectrum, which would never be good. You know, the opposites are never a good thing for markets. You know, market likes balance. You know, not too far one way and not too far the other way. And we look forward to that. Hopefully that's what's going to happen.
I mean, the AI play that you mentioned, we were talking about yesterday, how much money it's going to cost just to set up the infrastructure. Bloomberg estimates $1 trillion. Who was it? Moody's estimates $2 trillion in spending over 5 years, which seems to me a massive amount. Do you see other places to play that? Obviously, big tech. Everyone's in it. It's already run up, right? Are there sort of stones unturned that we need to look under?
Well, I think the fixed income market is certainly very apprehensive about this. They've been sort of like we're not reacting, we're not rallying like the stock market. And I think it's because there's a big concern that all of this will cause further inflation versus the continued steps towards, you know, curbing inflation. But yes, I think the longer term prospects for technology will be very, very good. And the reason, again, is because of the unleashing of energy. And although there will be a lot of spending, the hope here is that there will the growth and the cost cutting will offset the majority of that.
Nancy, we thank you for joining us, and can you believe it? Just over 30 hours away until NVIDIA earnings.
Oh, yeah.
Like a very long time away, but of course that will be another pivotal moment in the market. But before that, coming up, we're going to explore what might be a historic crackdown on one of the world's biggest technology companies. We've been talking about it, Alphabet. The details on that next. This is Bloomberg.
in case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. You're looking at stocks that are down across the board. Although the NASDAQ is doing much better than it had been at the top of the session, now off only 0.25%. The S&P 500 is still down 0.4%, and Russell 2000, the small cap's down about 2/3. So not as bad as it could have been, as it would have been, had we not, I guess, gotten that headline from the U.S. saying they won't respond to Russia's expansion of the nuclear expansion that Vladimir Putin has signed.
Yeah, and as you've been talking about it, while the broader markets are lower, there are actually some stocks under the surface higher, and this one in particular is surprising, Alphabet. It was lower on the morning, now higher by 0.5% after a Bloomberg scoop that the Department of Justice is looking to force Alphabet, is forcing Google to sell its Chrome browser after a judge ruled that it was monopolizing the search market. If the proposal goes forward, it could reshape the online search market and the nascent artificial intelligence industry. Here with more insight now, Bloomberg Technology co-host Caroline Hyde. And perhaps, as you've been saying to us, Google now up more than 0.7%. Is the relief here that it's not Android?
Yeah, you've got to remember, all kudos to Leah Nyland and the team over who report on the DOJ. She has been on top of this from day one. And it was but less than a month ago she was hypothesizing that the government was going to push the judge in the case to look at selling off Android or Chrome or some other parts of the business to rectify the idea that this monopolizes search. Now, few is not going to be Android, it seems, but would they push for Chrome to be spun off? And indeed, who would be the buyer? There's lots of question marks here, but ultimately, this would be a big change to the business model. Ultimately, they are bigger than the sum of their parts because they've got about 60% market share when it comes to browser with Chrome. Then they have 90% market share when it comes to search. Many people use Chrome to then get to search. They know a lot about us when we sign into Chrome and then start searching. They can sell that on, use that data. It's incredibly important.
Yeah, I mean, if you use Chrome to save your passwords, then you're all across the net with it. And look, this is all interesting theoretically, but if you follow antitrust suits on either side of the Atlantic, you know that it takes decades to get to a result. So let's say they were successful in forcing Google to sell Chrome. Would it be 2044 before they actually have to do it?
Well, come April, I think the judge is going to be hearing some of the rectifying behaviors that would get out of Alphabet to ensure that it wasn't a monopoly. Come August, you then get the final view from this judge. Then you get the appeal, and many are feeling, look, the judge is probably going to look to precedent set with Microsoft when the appeal worked, when they weren't forced to break up due to causality, basically, was the argument there. So many feel that, yes, like Dan and I have been saying, this will take years in the making. I do think it weighs on the stock. I think ultimately that you're looking at price versus future earnings. We're looking at about a 20 times versus valuations. And look, compare that to Microsoft, which trades at about 30 times future earnings. We do have a slight cloud over when it comes to European and US views on Google and how monopolistic it is. But I think they can find ways to rectify this. They can also perhaps push back on some of the calls to be sharing data when it comes to AI. It looks as though the US government's going to be saying, look, we want you to share how you make search so good. Well, that's going to beef up competition in many ways.
Is it fair to say that when we think about the teeth of regulators around the world, that the UK Competition and Markets Authority perhaps has had even more teeth than US antitrust authorities and has been forcing these companies to do a lot of things, yet today is actually a pretty large day, isn't it? Because we do see that Anthropic investment cleared for Google.
Yeah, so in one way, we've got the big headwinds facing in the US for Google and a view that it's monopolistic in search. And then over when you're looking at its AI investments, more than $2 billion put into Anthropic, the CMA is saying actually, A-OK with this. We don't think you're having too much say, too much control from a board or management level here. You can keep your investment in Anthropic. And of course, that builds out the artificial intelligence prowess of Alphabet and Google. Remember, from a cloud perspective in particular, it's helping with that side of the business. But maybe more the US DOJ side is the worry when it comes to AI overviews and the way in which we're starting to see our own data be populated and indeed clients' data is used within AI overviews.
This is all, fascinating for the near to long-term future. But in terms of the immediate, Caroline, Shonali pointed out, we're almost there. NVIDIA earnings are going to be out in 30 hours.
Yes. I love that you got this time.
So I imagine you'll be looking forward to that on your program.
I might mention it. No, look, this is the most valuable company. This is going to have the most powerful impact on the S&P 500. Remember, NVIDIA is 20% of all the run-up in the S&P so far this year. It is about 25% of all the earnings growth. It is integral. Look, we're looking for about an 80% increase in revenue. You're looking for profit when you're looking at net income to basically double. But the key factor here is how is the Blackwell system selling and how is it supplying? We've had a lot of concerns about ultimately the making of the Blackwell chip lineup. Latest reports out of the information worries that we're getting overheating when it comes to the overall making of it and redesign necessary. Look, yesterday NVIDIA came out and said, this is all expected. We are working closely with our cloud providers, and we know that this is just as it always usually is when you're trying to innovate in this way. In fact, Jensen Huang has been on the stage at yet another AI event over in Atlanta, and he's saying you're going to see a 1,000,000 times increase in compute power over the next decade. He is in no way shying away from the fact that AI compute's going to keep on ramping up, and indeed AI power within large language models is going to get ever more powerful through scaling laws. They still hold.
It's incredible. We are just over 4% lower than the all-time high this year for NVIDIA. You've got to wonder if after tomorrow we retest that level. We are not far off. Caroline, we thank you so very much for joining us. That is Caroline Hyde. Caroline will, of course, be taking a deep dive into Google and the antitrust issues later today. Sarah Olam, a senior fellow at the Technology Policy Institute, joins Bloomberg Technology today at 11 a.m. New York time. And coming up, is Trump's economic team finally taking shape? That's next in our Wall Street Beat. This is Bloomberg.
European earnings season. Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Take a quick look at what's going on with stocks right now. We're still looking at losses, and I don't expect that to change. S&P 500 down a little more than 0.5%. Futures were down 1%. So at least some de-escalation from the U.S. government in terms of the Ukraine-Russia issue has calmed markets to some extent. NASDAQ off by 0.4%, and the Russell 2000 small caps losing by the most. One of the biggest gainers on the S&P right now is NVIDIA, followed by Walmart. In terms of points, obviously NVIDIA typically adds the most points because of its size. But Walmart and Google are right behind it.
And NVIDIA, as we've been talking about, less than 5% away from its high of the year. Earnings tomorrow, but time now for the Wall Street beat. Another massive story of the morning. President-elect Donald Trump is said to be considering appointing Kevin Warsh, a former Federal Reserve official, as Treasury Secretary, alongside hedge fund manager Scott Bessent as director of the White House's National Economic Council. Bloomberg's senior Washington correspondent, Saleha Mohsen, joins us now with more, has been watching Treasury closely for a very long time. And of course, this rat race, let's call it, into the top spot in Treasury in this next administration. How does the latest round of jostling really set the stage for what his economic team might look like?
Yeah, you know, we still don't know who is going to be Treasury Secretary. And, you know, I don't see how Trump can decide what the rest of the team can look like until he's filled and decided on a candidate for that very key post. We know what his economic agenda is. We know that he wants to go very strong on tariffs, and he wants a Treasury Secretary with Wall Street pedigree who will carry forth and implement an agenda that is heavy on protectionism.
So how does Kevin Warsh's resume look in that respect? You know, Neil Dutta has been saying for a couple of days now, Warsh is a hawk. And in terms of his positions on the Fed, he was very hawkish. But Shanali and I were talking about this earlier. Treasury is a very different position than being a Fed governor. He's still going to pursue a strong dollar policy, I guess. That's what most treasuries do. But he's going to have a broader remit in terms of tariff policy.
Absolutely. You know, we know it's very clear that an economic populist or protectionist agenda is very important to Trump right now. And he doesn't want too many free traders or any free traders in the room when he's making these key decisions to fulfill these promises to implement huge tariffs to rebalance trade. And so, yes, he wants someone with a Wall Street pedigree, but he also wants someone who will not be a bulwark to tariff and protectionist policies, but serve to carry those forth. Now, we've heard from Scott Bessent publicly talking about how tariffs are a great policy, not just for trade, but also foreign policy and national security. We don't know what Kevin Warsh's more recent comments are. I know that we've looked up some of his past comments on air and in his writings that he has talked about how we should not, let protectionism seep through into our economy and our policymaking, but those comments are 10 to 15 years old.
Saleha, we thank you so much for your time, for all of your reporting. Don't miss it, a minute-by-minute year as this drum beats into the final decision-making. It is quite the score. Now, coming up, we are going to also talk a little bit more about the markets, but before that, we're going to bring you some breaking news here. Of course, Citadel's Ken Griffin speaking a lot this week, but currently now to Bloomberg News, we have a story out on the terminal saying something that is really resonating here with the hedge fund community. The idea that the multi-strategy hedge fund boom is over. Of course, he's the cream of the crop here in that world. He said in an interview to Bloomberg's Nishant Kumar that assets under management flows into funds are basically a push today. It's over, I guess.
That is interesting. Yeah, yesterday he was at Oxford, and he said that the tariff situation makes him very anxious. But in terms of the U.S. economy, we would be returning to the business of business. And I guess Nishant in London got an interview with him. So we'll have more on Ken Griffin coming up. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
This is CBS News on the Hour, sponsored by...
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes. You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
Trigger genetic modifications that allow fat cells to store memories of being overweight in their nucleus, making it easier to put those pounds right back on. Metabolic epigeneticists say that's the old yo-yo effect. Dow down 349. This is CBS News.
.com/free.
Two drummers for the Gibb brothers have died within days of each other.
Colin Peterson, known as Smiley, was a Bee Gees drummer in the early days. His death at 78 was announced on the Bee Gees Facebook page, cause not given. Just 4 days earlier, a drummer with the group during the disco days died in Nashville. Dennis Bryan played with the Bee Gees from 1974 to 1980. He was 75 years old. Steve Kafen, CBS News.
Happy 93rd, Rita Moreno.
Buying on credit is so nice.
To honor her birthday next month, Mattel is releasing a Barbie in the actress likeness. Moreno is one of only 21 performers and the first Latina ever to win an EGOT, an Emmy, Grammy, Oscar, and a Tony. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to youtube.com/Bloomberg Search Bloomberg Podcast, and that's where you'll find us. We're going to break down some news on President-elect Trump. His November 26 hush money sentencing has been adjourned by the court. Eric Larson, Bloomberg legal reporter, is going to join us to break down that news. We're also going to check with Mark Champion, Bloomberg opinion columnist. He's a real expert on European geopolitics. He'll give us the latest coming out of Ukraine and Russia as those tensions escalate even further. David Gura, he is reporting live from Rio de Janeiro. Give us the latest on the G20. So we got a lot of global news we're going to break down over the next hour. Let's kick things off, as we do in this hour. Lisa Mateo, get a Bloomberg Business Flash, Lisa.
You got in this Bloomberg Business Flash brought to you by IBKR with Interactive Brokers Forecast Trader. You can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. All right, we've got stocks really taking a hit after Ukraine carries out its first strike with U.S. missiles in Russia. That's sparking a rush to bonds and to gold. Let's start with stocks, though. The Nasdaq down 0.2%, 49 points. The Dow down 0.8%, 367 points. The S&P 500 down 0.4%, or 28 points. Moving over to the bond market, the 2-year yield 4.25%, down 2 basis points. The yield on the 10-year 4.37%, that's down 3 basis points. Over to commodities, we have spot gold higher, up about 0.5% at $2,624 an ounce. We have Brent crude up about 0.5%, $73 a barrel. WTI crude $69 a barrel. To currencies, the Bloomberg Dollar Spot Index little change. We have the Japanese yen stronger, Euro, British pound weaker. We have Bitcoin up about nearly 1% at around 92,000. To earnings we go. Lowe's raised its sales forecast for the year, but here's the thing, it's comparable. Sales fell in the third quarter. Shoppers put off those big home projects, so those shares are down about 3%. And shares of Walmart, they're up 3%. Raised guidance for the year, be third quarter revenue profits. That was due to strong spending from those upper income households. And finally, a Finnish sports goods maker, Amer Sports. They own brands including Wilson, Arc'teryx. Third quarter earnings beat estimate. The ADRs, they were higher right now. Now they're down about 1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele here alongside Paul Sweeney. We are definitely covering all the geopolitics as well as the market impact. But before we get going, we wanted to start right here in New York. Apparently, Donald Trump's November 26th sentencing in his New York hush money case was adjourned by the court as the judge now weighs how to handle the case. So we wanted to give you a quick update on what this means with Eric Larson, a Bloomberg legal reporter. Eric, what do we know?
Well, we don't know the reason why the sentencing was delayed, first of all. So the judge did not say, they just said it's been adjourned. But I think the writing is on the wall that it may not be happening right away, at least as a result of the election. The Manhattan District Attorney, Alvin Bragg, has a deadline of today to tell the judge what he thinks should happen to the case going forward, just in light of the election. So that document is expected to become public at some point, possibly soon. He could either suggest that the case be dismissed, I think is what Trump is hoping for, or perhaps put on hold for 4 years and then restarted after Trump's second term, or handled in some other way. So we're just going to have to wait and see what the prosecution is suggesting here.
I have to admit, I've totally lost track of the various legal issues against President-elect Trump. Is he going to be or likely to be cleared of pretty much everything when all is said and done? Is that what
that's certainly the expectation among a lot of people. Certainly his most serious cases, those 2 federal prosecutions over his attempt to overturn the 2020 election and the classified documents case, the Justice Department is potentially going to be dropping those because of a policy against prosecuting sitting presidents.
All right. Luckily, we have a reporter that follows all this stuff.
Yeah.
Eric, thank you so much. Eric Larson, Bloomberg legal reporter, giving us the latest there. Market Drivers today is brought to you by Wells Fargo Advisors. Consider Wells Fargo Advisors Financial Network, where you can run your business with true independence, supported by unrivaled resources. Learn more at WFA.com/resources. Read on the screen here as Lisa Mateo is just reporting S&P off about 0.4%. It was actually more in the futures market, so we're kind of off the lows here. Let's check in with Alex Semenova. She covers all the equity markets for Bloomberg News. She joins us here in our New York City studios. Alex, what are you looking at?
Hey, guys. Well, first we got to start with this deal. Blackstone planning to buy a majority stake in the sandwich maker Jersey Mike's. Nice. This is as the alternative asset.
I've never had Jersey Mike's.
Founded in Point Pleasant, New Jersey, now headquartered in Manasquan, New Jersey. And they actually have like a Jersey Mike's place where you go to learn how to make this.
Oh, so it's worth like
cool.
going. There's
It's a
one near
thing.
my house. Yeah.
Oh, yeah.
Okay.
It's a thing.
Sorry. Go ahead,
very
Alex.
good.
And so, yeah, this is part of an effort by Blackstone to further its investments in food services chains. Their founder and CEO will still maintain a significant equity stake and continue to lead the business, but now it has the backing of Blackstone. This transaction is expected to close early next year. The financial terms of it were not disclosed at this point, but the deal could value Jersey Mike's at about $8 billion. That's including debt.
Now, this isn't the only deal. I'm sorry to interrupt, but Roar Capital, another private, they bought Subway.
Yeah, so
recently.
this is kind of a move to
private equity going into
exactly
the sandwich business.
Exactly.
I wouldn't have called that. But.
And Blackstone, too, it's certainly not the first move like this by Blackstone. Earlier in February, they also invested in 7 Brew Coffee to accelerate the expansion of drive-through coffee chains. So really making an effort here to back these types of companies.
What else are you watching?
Of course, we're keeping an eye on Supermicro. The move on that stock is quite crazy right now, up about 25%. This is, of course, after they hired a new auditor. You guys remember I think it was back in October now, they disclosed that EY will no longer be their auditor, basically saying that they weren't transparent in their financial disclosures, and that led to the worst downside move on record, I believe, for Supermicro. So a little bit of a relief here for investors now that they've hired a new auditor. It is going to be audited by BDO USA. That is the 6th largest auditor by revenue, according to Inside Public Accounting. And interestingly, the firm actually only has one other S&P 500 company that they're auditing.
Yeah, that's a little dicey, but it's better than the alternative.
It's better than the alternative,
yeah,
right? Now they at least have someone.
It's amazing how the accounting business, when I started in the business, it was the big 8, then became the big 6,
Yeah.
now it's the big 4, so that's how it goes.
I remember page-checking BDO files in my legal firm days.
Okay,
Yeah, I remember that.
good.
It was a thing.
Exactly.
It was something that I did.
All right, Alex Semenova, thank you so much. We appreciate that. Alex Semenova, she covers all the equity markets for Bloomberg News. Geopolitical news, front and center again today. The Ukraine carries out first strike with U.S. missiles in Russia. And then we had some rhetoric coming out of the Russian foreign minister down at the G20. Really spooky markets. Mark Champion joins us. He's a columnist for Bloomberg Opinion. He's located in London, and he is one of our resident experts on geopolitics, particularly in that part of the world here. Mark, it just feels like, today was not a good day for the folks that were looking to try to move towards a resolution there in Ukraine. What's your latest view on what's happening in that part of the world?
Yeah, I mean, the kind of trajectory we have is that the Ukrainians are very much on the back foot on the battlefield at the moment. They have been for some months. Obviously you have a new U.S. president coming in who says he wants to end it all in a day. The question is, at this point, everybody is agreed, including Volodymyr Zelensky, that this needs to come to an end next year. The question is which day and which end of the year. How do you get President Putin to the negotiating table as opposed to just offering to accept Ukraine's surrender? In the current circumstance. So what the Ukrainians want to do, what the Biden administration seems to be, trying to help it to do, is to change the facts on the ground such that, Putin will have some incentive to actually negotiate.
Well, I was going to say, who has the upper hand at this moment?
Well, there's no question the Russians do. They're moving, every day. They're moving forward along the front lines. It's not a collapse. It's not a kind of sudden, end of days. But there's no doubt about which side has the initiative at the moment. That has kind of flipped from one side to the other, throughout the war, and it could flip again. But at the moment, the Ukrainians simply lack the number of personnel. The manpower to do it. They were late with mobilization, and they are in a pretty bad state. So what they're asking for is different ways of helping them so that they can stabilize the line, perhaps even change the momentum a little bit, and then importantly strike behind the Russian lines to increase the cost of continuation for President Putin so that he actually has a reason to say, okay, I'll talk.
Between now and Inauguration Day, it seems like a time period where each side will be trying to just, improve their position with the understanding that it looks like whether we want to or not, we're going to the negotiating table. Is that kind of the view?
Yeah, I think that's exactly what's going to happen, and that's the context in which to say to look at the sort of Russian sabers rattling again on the nuclear issue at the moment. I mean, the reasons for not pushing the nuclear button have not changed, and there are real hurdles and costs involved in doing so. President Putin didn't do that when Russia was losing on the battlefield, and he's very unlikely to do it when they're winning. But it does tell you that he's trying to shape what the U.S. in particular does between now and next year. And this is one tool which he has to do it. He has others. Yes, absolutely. Both sides will be trying to maximize their position for when they actually have to make some kind of deal.
And does that deal, is that contingent on, say, President Trump, or you think regardless of who's in the White House, this is the way it was going?
It's going to probably get there faster because of the arrival of Donald Trump. But yes, that's where it was going. Zelensky. If you look at Zelensky's victory plan, which is often misconstrued, if you actually read it, he's got a 5-point plan there. None of them talk about territory. None of them say we have to get Crimea back or we have to get this back or that. It's 4 points which are just about security. How do we secure Ukraine to make sure that when we agree to a ceasefire, it's just not a little interlude before the Russians attack again? And then a final one, which is a sort of, just a bid to interest Donald Trump in particular, but, the West in general, in what they can get out of helping Ukraine in terms of resources and so on.
All right, Mark Champion, thank you so much. We really appreciate getting your thoughts there. Mark Champion, he's a columnist for Bloomberg Opinion, joining us from London via Zoom, giving us the latest thoughts on Ukraine. Again, the thinking now is perhaps in 2025 that might be a period for some type of truce to come to that part of the world. We'll have more reporting on that. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio. I'm Lisa Mateo. We've got stocks slumping. This is over the latest escalation in Russia's war against Ukraine and afterwards from Russian Foreign Minister Sergei Lavrov. Right now, we have the NASDAQ down 0.1%, 30 points at 18,761. The Dow down 0.8%, 369 points at 43,015. The S&P 500 down 0.4%, 27 points at 5,866. We have the two-year yield at 4.25%. That's down 2 basis points. The yield on the 10-year 4.38%, and that's down 3 basis points. We also had some more economic data. We're looking at the slowest pace of home construction in 3 months. Now, a big part of that was hurricanes affecting the southern region. Housing starts, they decreased 3.1% last month to a 1.31 million annualized rate. And the breakdown, new single-family home construction fell, but multifamily housing starts, that increased. Building permits, well, they eased. Shares of server maker Super Microcomputer still on the rise, up 24%. It hired a new auditor, also in hopes that it'll avoid a delisting with the NASDAQ. And shares of Nestle, they're down 2% in Switzerland. Investors felt that its updated guidance was a little bit too ambitious after a really tough year. The company also announced plans to separate its bottled water brands into a standalone business. And finally, Blackstone agreed to buy a majority stake in Jersey Mike's. The deal could value the sandwich chain at about $8 billion, including debt. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. Let's head back down to Rio de Janeiro. David Gura is their correspondent for Bloomberg and host of the Big Take podcast. He's at this week's G20 summit here. David, I understand, out of these events, one of the, I guess, the action items or the work products is a communique. Have we gotten the communique from this group, and anything surprising in that communique?
We have gotten it. It was signed off on by the president of this G20, that's President Lula of Brazil, and where there was kind of a fractious debate over the last day or two was over language about these two conflicts, the one in the Middle East and Ukraine as well. There was an effort from some of the nations who are gathered here to put more specific references to the conflict in Ukraine and point the finger at Russia. Russia's president is not here in Brazil, but its foreign minister is. In the end, that didn't happen. Lula didn't want this fractious debate to continue and bleed over into that communique and raise the prospect of not getting a joint declaration at the end of this summit. So it didn't happen. We have it, but it's pretty bland in terms of what's in it about sort of climate and development financing, and yes, a nod to these two conflicts, but nothing sort of specific, no direct finger pointing at any countries, be they Israel or Palestinians or on Ukraine or Russia as well.
What's the word there in terms of the geopolitical risk when it comes to Ukraine and Russia and the heightened rhetoric that we've seen overnight?
It has really scuttled things here. As I talked to you yesterday, it was certainly something that was percolating, the subject of conversation in a lot of these bilateral meetings among leaders. But the events that happened overnight, the use of these long-range missiles that were made in the United States against Russia on Russian territory has really scrambled things quite a bit. And so we've been listening as these world leaders have done news conferences, as they've had more of these bilateral meetings and spoken to the press beforehand about how they address this. And I think that the most important remarks came from the foreign minister for the Russian Federation, from Sergei Lavrov, who spoke this morning. He criticized them and sort of said that what we've seen here is the U.S. pushing for escalation of that conflict in Ukraine. And he urged all the Western leaders here to look at the nuclear declaration that Russia has updated overnight. So this is when Russia would see an act of aggression as substantial enough to use nuclear weapons in retaliation. And the change that Russia has made here is to say, if a non-nuclear power were to attack Russia, but it was done in concert with a nuclear power, Russia would see that as an act of aggression sizable enough that it could retaliate in kind. Now, the U.S. has responded to that, and Bloomberg News spoke to a National Security Council official who said the U.S. doesn't plan to respond in its nuclear declaration as a result of that. So there's an effort here on the U.S.'s part to kind of move forward here, infuse some stability into the situation. And what the U.S. is saying is that this change in the document looks bad in this particular crucible at this moment after those long-range missiles were used, but it's something that they perceive as having been in the works for a long while here.
David, one of the silly things that seem to come out of these G20 issues is the family photo. Can you give us the latest reporting on what's been happening with the family photo?
They took this photograph yesterday, and it does seem silly, but it is sort of the memento from each one of these global summits. All of the world leaders get together on a stage, and a lot of thought goes into who's standing next to whom, where people are, so as not to upset anybody who might not be talking to somebody else. They took that photograph yesterday, and there were some notable absences from the picture. So Prime Minister Justin Trudeau of Canada wasn't there. Neither was Prime Minister Giorgia Meloni of Italy. They were in a bilateral meeting when that photograph took place. And President Joe Biden wasn't there either. And there was a lot of confusion and anger on the White House's part that he wasn't included or wasn't told when that photograph was taking place. Some concern if the timing was moved. But he didn't end up in it. And so it's a metaphor that I think a lot of people have seized on here for the U.S.'s role, yes, in this summit, and for Joe Biden's role here in the waning days of his presidency. But I do have an update for you, Paul and Alex. They are going to try to retake that photograph today to include those three world leaders who were absent from that initial photograph.
It's like the Christmas photo. You got to get all the kids together and round them all up.
But they don't have matching sweaters.
They don't have matching sweaters. And
who's looking at the
maybe you could do it
camera?
on the
Yes,
beach
exactly.
like a lot of families do. All right, David Gurr, get back to the important business of all the geopolitics there at the G20. David Gurr, correspondent for Bloomberg and host of the Big Take podcast.
All right, taking a look at the markets again, we get the S&P is down by about 4/10%. The NASDAQ off just slightly. What do you do in the market when there is a slight safe haven bid? I say slight because we've definitely backed off some of the levels that we've seen earlier in the session. Chris Walling is CEO and Chief Market Strategist at Longview Economics, and he's here in studio to discuss his latest calls. Chris, we're getting all the 2025 calls out now. Everyone's looking pretty bullish, but the bear case and then the bull case seems to be super wide. What are you guys modeling right now?
Well, I think what's really interesting is what we're seeing in terms of the global economy next year. When you sort of whip around the world, you look at China, you look at Europe, the UK, and the States, obviously, with its new government, there's all sorts of stimulus coming. I mean, if you look at a raft of 90 central banks around the world, the vast majority of them are cutting, and they're in cutting mode. Very few are raising rates. That's normally a very good environment for equity markets. So tons of stimulus, lots coming. Yes, there's a lot to worry about. That's why you get those wide ranges on those forecasts. There's a lot of left of field with the new administration, and one's got to think about those tariffs and the like, and appointments still to come. So one doesn't really know how that's going to play out, but I generally think that the thrust is good. And bizarrely, we could actually, absent those risks, we could actually have a year where volatility falls and sort of go. You remember 2013 or 2017, volatility collapses because everyone's cutting rates. There's a lot of liquidity around. So I can't get my L's out there. But
So in that kind of environment, long stocks, my long credit, how do you think to play it here?
Well, I think your long equities and your long bonds, bizarrely. I think government bonds are oversold. And actually, I mean, I know the data's distorted today, but housing's just struggling. You know, there are parts of the US economy that need lower rates to get it going. And the fiscal impulse is dying as we go into next year, and we'll have to wait until you get another fiscal package, and we don't know what the size of it will be. So I think long stocks and long bonds, and you want to play the cyclical parts of the market, which I think, you know, when you get that cyclical reacceleration, that's a great place to put money. So Mag 7 dominance is slowly dying, in my opinion.
But then on the flip side, you'll say, I'll hear things like, yeah, but retail sales are holding up, the job market's still holding up, inflation's still holding up, so maybe we're not going to get the kind of rate cutting cycle that we might expect.
Well, yes and no. I mean, inflation, in my opinion, is dying. I mean, this was a classic monetary surge of inflation. People like to compare it to the 70s, but there are much better comparisons going further back, where M2 surges and then M2 collapses. And that's really what we've had. And that's the kind of inflation outcome we're going to get, where inflation is going to dissipate. So that'll encourage the Fed, I think, to do a little bit more than people expect.
The event tomorrow, presumably, just on the earnings front, will be NVIDIA after the close.
I was like, what event? And
yes,
then,
we've kind of had it with NVIDIA. We've been talking about it since, earnings season began, 4 or 5 weeks ago. How important is that? Because it seemed like for 2023, for most, if not all of this year, the AI trade has been powering this market. And it feels like maybe it's fading a little bit, but how important is NVIDIA tomorrow to you?
Well, NVIDIA is important, but it is only one stock.
Yep.
I mean, it doesn't feel like only one stock. It feels like the whole market. But it's only one stock, and really the Mag 7 has become the sort of Mag 1 or 2. So there's a limit to how much the market can be powered high by a couple of stocks. And I think that's the point. And the other thing about NVIDIA is, the second derivatives of earnings growth is slowing. So it's kind of, when it's stocks like that, you need the first derivative to be fast. And that's now slowing. I wonder if margins are toppy. So, I think Mag 7 as a whole is toppy on margins. NVIDIA, of course, is exciting, but I don't think it has the influence it had last year.
So based on that, and then you talk about the rate cutting cycle really being front and foremost in sort of how you view the market, is that an ex-U.S. equity situation, or is that a U.S. or is that just a U.S.?
So I think it's a global cyclical trade, and of course the large cap US is dominated by Mag 7. So I think what we'll find is they've become a source of funds to buy into cyclical parts of the global stock market. So in the US mid and small caps, some of the cyclical areas of the market for sure. People talk about financials, tech, but outside the US, tons of stuff. You know, there's so much cheap stuff that's cyclical. We're going into sort of nominal GDP growth. This is all good for those parts of the world. We like the UK. We like Spain. Bizarrely, sort of no one's talked about Spain for a long time.
Why do you like Spain?
Because Spain spent 15 years getting its house in order. And Germany's the sick man of Europe, which means rates are lower in Europe than they otherwise would be, and Spain gets cheap money. So it's a lovely little combo. And Spain's doing really well this year. There's four out of 50 countries in the world that are more than 50% discount to the US, and their earnings growth is faster over the last few years. Places like that are going to do really, really well. Greece is one of them. I mean, who talks about Greece?
Nobody talks about Greece. But that's on an equity side. So for Spain and Greece is on the equity side, not the bond side? Or
that's
both?
all the equity side,
Okay,
absolutely.
okay. Mm-hmm.
Bonds, you know, I mean, fine. US bonds, great.
So, exactly. All right, so you woke up 2 weeks ago in London, saw the Americans elect themselves a new president. We now know that how the Congress is going to look like. Did that change your view at all about how to invest?
Well, at the margin, potentially, you get a bit more fiscal and a bit less sort of consumption growth out of the States, so there's a bit of a risk of that. But actually, it made me feel more bullish. You know, I'm apolitical. I'm a Brit, so I don't vote. It's nothing to do with me. But looking at it objectively, it seems much more pro-growth, with the exception of the tariffs risk, basically. So yeah, it made me more bullish, cyclical stuff.
But I guess what it does matter is the fiscal side and the fiscal policy, in which case, where do you invest in small caps, say, or mid caps?
Well, you know, I think the consumer's going to do well. There's untapped wealth in the US and the UK and Southern Europe. And so I like consumer cyclicals. And I think bonds are coming down, so I like housing-related stuff. So all of that I think is good. I'd be cautious on the biotech because there's all sorts of policy changes coming around the corner. But yeah, I think there's a lot to go for in the mid and smalls.
All right, Chris, it's always good to see you. Thanks for coming by. Great to see you in person. Chris Watling,
Thank
CEO
you.
and Chief Market Strategist of Longview Economics. I read their weekly report every Friday.
Nice, good.
Really at 11:30 in the morning, but I'm focused. It's just
Okay.
on commercial break. You know,
Okay.
you gotta stay current on
Gotta
that.
stay engaged.
All right, coming up, we are going to talk to Emily Cohn, Bloomberg Consumer Team Leader on Walmart earnings. It was interesting, Paul, that you saw Walmart do well on those that make over $100,000, and I wonder if that kind of customer will be sticky even as the consumer comes back, even if as inflation lowers, or if they'll be fickle.
Walmart's up 66% year to date.
Yeah, that's a
52-week high. I mean, this is. I didn't see that coming at all.
But you've been to a Walmart now.
Oh yes.
So okay,
yes.
this
Yeah.
was a big moment. He went anyway.
And that will be the final job on the resume.
This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are mixed, and this is after news that President Vladimir Putin pushing ahead to allow Russia to expand its use of atomic weapons. We have the NASDAQ up 0.1%, 28 points. The Dow, though, down 0.5%, 215 points. The S&P 500 down 0.1%, or 7 points. We have the two-year yield at 4.27%. That's down 1 basis point. The yield on the 10-year, 4.38%, and that's down 3 basis points. To commodities, we have spot gold higher, up about 0.5% at $2,624 an ounce. We have Brent crude at $73 a barrel, WTI crude at $69 a barrel. Over to currencies, the Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger, euro, British pound weaker. We have Bitcoin up nearly 1% at around 92,000. Companies making news, that would be Apple. It's increased its offer to invest in Indonesia, and that's in order to persuade the government to lift that sales ban on the iPhone 16 there. Sources say it plans to invest almost $100 million in the country over 2 years. And the Department of Justice pushing Alphabet's Google to sell off its Chrome browser to break up its search monopoly. Sources are saying it's also seeking action on data licensing and AI measures as well. And finally, Novo Nordisk launching its Wegovy obesity drug in China. It's at a lower price than in the U.S. Now, according to online listings, a 1-month supply of the starter dose will cost just over $193 in China compared to the more than $1,300 list price in the U.S. Its ADRs now up more than 2.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. And we want to know, what would you like to hear about on Bloomberg Radio? This helps make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg podcast and click the link in our profile or community section to take the survey, which is hosted by our partners Material. Fill it out now at youtube.com/Bloomberg podcasts. All right, let's get back to the market here. So we may have some geopolitical risk shaking in the market, but if you take a look at some of the equities like a Walmart, still holding up fairly well. That stock now around the highs of the session, up almost 5%. Joining us now to discuss is Emily Cohn, a Bloomberg Consumer Team Leader. I mean, she heads all the stuff of consumer stocks. She joins us now in studio. Emily, wonderful to see you.
Thanks, Alex.
What do we make about the reaction to Walmart stock? Because consensus was already high. The stock had already moved. Like, we kind of knew it was going to be good.
So when you think about Walmart, Walmart is a bellwether of the American economy, of the American consumer. What does Walmart earnings tell us about that? Walmart beat expectations today, sent a really strong signal that the holiday season is off to a solid start, and the market was excited about that. Though growth in the number of transactions or checkouts slowed, the growth rate slowed a little bit. The average ticket, the amount people were paying in each checkout was up. And a lot of that growth was coming from higher income shoppers, people in households making more than $100,000 a year. That cohort made up roughly 75% of the share gains. So this was good. It was a solid start to the holiday season, and the stock is up a lot. 4.5% is up a lot for a company that big.
Stock's at an all-time high of 67% year to date, which I had no idea. Their e-commerce business. Talk to us about their e-commerce business. I know it's big, but Amazon's pretty big too. So how do they talk about their e-commerce business?
When they talk about e-commerce, they just talk about the potential to grow. It is big, but there is still so much room to grow. So just in the last couple of months, we saw them branching into categories that you wouldn't find in a typical Walmart store. Pre-owned watches, collectible sneakers, stuff you would typically go to another retailer for, but now you can buy at Walmart online. Also, they're adding benefits to their